Good morning, guys. Sorry about the delay there. The OBS popped up and it was updating, so what's up? I heard Mars needs guitars. How dare you? Hey Jen Jen, how you doing? How's everyone's weekend been? Good. Well, that's a plus. Where are we gonna start? Mine's been alright. I had to pay for some sort of ground like soil penetration test. And no, that's not a butt sex thing. It's a ecological report. Sick as fuck, but my girlfriend finished her master's program. That's cool. Is she looking for a new boyfriend now? Don't tell me about your thoughts on gold exposure. Dog, I'm the one with the trust. Oh, okay. All right, all right. I see you have the upper hand. I put last minute on Friday. Surely it's a safe play. You think so? Maybe. I love gold, the look of it, the smell of it, the texture. I know you do. Shift Junior. 12 months ago, you hated gold, Dork. What happened to you? That's a fucking lie, and you know it. Okay, fine. 13 months ago. There we go. There's meme chatter out there that Nvidia is done with VOPs. The seeds of doubt are being planted. It's spring. I don't like gold because everybody was dovish as fuck. Now everybody's like, oh lord, dollars suck. I mean, they don't suck. In fact, they're really good, but someone's gonna need to make them suck soon. Yeah. The 10-year closed the week above 4.4, Dirk. Did anybody check and see if all the bank lights are on over the weekend? Treasuries suck too. Why the fuck would you buy treasuries when you can short VIX for 30% yield? Okay, fair. Well, you can't now. It's negative 1% yield. When yield's above 7%, I don't know. I assume that the Fed's gonna probably need to hike, but we'll get into that shit later. Um, where do we want to start? Do we want to start with memes? Do you want to get the memes out of the way? Or do we want to start with Mag 7 and then do memes and whatever bullshit there's time for? There's only like 5 meme stocks now. Well, maybe 6. SPX is gonna come at the end with me and JFresh and Dork. With Fed, JPOW, and Yellen, are we seeing the Zimbabwefication of the USA USD Fed hike needed? Big Fed hike. HAL is a meme stock now. It's not a meme stock. It's just awesome. It's been awesome since I bought it. It's still awesome. Probably not going anywhere. Memes first. Mag 7, please. Lizard. Mag 7 equals meme. All right. Yeah, let's start with the Mag 7. Hold on. Nope, that's not a real stock ticker. All right, let's look at Apple. New fear theory is that of rolling commodities bubbles due not to demand but supply side imbalance. There's reserve imbalances too that should probably be considered. I feel like copper is still really cheap given the fact that I'm very interested in AG right now. Wheat and corn. Why? Like soft wheat might bump in the early spring. Copper is still super cheap, but how are we going to roll out all this AI cooling infrastructure without shitloads of copper? Oh yeah. Yeah. All right. So Apple is somehow still above delta neutral perpetually. Dealer exposure is negative. You know, I can just write this shit down so people can like go back to the stream and look at this. Dealer delta negative, dealer gamma positive, so still prone to spikes. Eh. Um, Vega exposure is pretty flat, although last week some sold puts fell off, which could mean that participants expect some more downs and bot calls rose. This is kind of in the same position it was. DN is at. Wait. Did JFresh not update for Friday? Motherfucker. Ah! Hold on. Data's not. Data's old. Use. Where is he? I need to DM him. Alright, I'm gonna have to look this up somewhere else. Son of a fucking bitch. All right. Gamma is positive. Okay, so here we go. DN is at 69, 169. So 50 cents below spot. Gamma is at 166. Gamma exposure. Dealer gamma. Positive. Dealer delta. Also slightly positive. I think someone's at my door. And charm. Charm was negative. So Apple might get a little bounce in the early part of the week. Oh, fucking Christ. Hold on. All right. Exposures are pretty low. I would say probably a small bounce in the early part of the week. As long as that stays under 173, it's still bearish. And that might open up an opportunity for spreads again. I would not sell spreads at the current price unless it fell back below 169. So still looks kind of like down over time, but very slowly. I would say maybe we get a continuation of the downtrend that's already been forming. Although this consolidation at the 165 level is starting to become more bullish. And if we did break above 173, that would definitely be a bullish reversal. So keep an eye on that 173 level, but if it gets rejected from there, I think that opens up some more call selling opportunities. AMD, now this one actually looked really good last week and not so much now. Give me 1 second. Looks like Delta and Gamma are still positive. Charm was pretty negative last week, so once again, that sets us up for an early part of the week bounce. I need the right dealer. I'll just write Delta up. Gamma up. Charms down. Important levels. DN at 155. GN at 164. Gamma's not very positive. So 170 close. It looks like it bounced off of gamma neutral on Friday. Well, I guess it bounced off of gamma neutral end of day Thursday. That could probably head back up to, how far could that bounce go? I could go all the way back to like 177, maybe 176. So I would look for this bounce to possibly be a little bit violent. And I would look for a rejection at the 176 level. If it rejects there, that opens up continuation to the downside with confirmation again on a break below gamma neutral. This could be like that test could be an opportunity for call selling, but I would say that vol is a bit too high. And that, so if I sold calls there, I would want to sell them like 30 plus DTE. And honestly, a breakout here has a slightly higher likelihood. So yeah, it could be risky. And then, you know, puts don't really look good until you can confirm a rejection. So Nvidia or AMD just may not be worth playing. Let's see. Amazon. Ooh, Amazon broke out. Interesting. Get rid of that bullshit thing. Boop. That's coming up on a retest of the upper trend. Possibly tested already. All right, 85. Gamma max is at 190. Delta 146. Gamma 152. Delta's still very positive. Dealer gamma is still pretty positive. Also. IV is not really lowering much. I would still say this looks slightly bullish. But it is getting kind of to the top of its range. Yeah, slightly bullish to neutral over this week. This doesn't look very interesting. Might be a good iron condor target, something like that, if the market doesn't like do anything crazy on Monday. I think we have like CPI, PPI this week, so there is some risk of indexes making big moves. Let's see. Google's starting to fail its breakout. That consolidation broke up and failed. Let me do, which chart is this? Goog. Delta and Gamma are back at 126. Gamma max 162. Everything was pretty positive into this last week. So this looks like possibly a downside continuation early part of the week. Although it may not have much range. There is support right there at like 150. And then yeah, still a lot of bot calls. The range on those isn't great though. I believe CPI is Wednesday, PPI is Thursday this week. Kashkari's speaking tomorrow again. He had a pretty big impact on indexes last week, so yeah, he definitely his speech definitely presents some risk. People are going to be looking for him to ease back on his prior statements, but I think overall the Fed's going to start pushing towards a rate hike narrative, especially if CPI and PPI are hotter this week. Hold on, I'm trying to see where the concentration of interest here is on Google. Demote him to Pontiff? So there's a decent number of calls up at 160, 155, 150. 150, 750, 160, and then it kind of falls off. But yeah, I would say even if Google gets the retest of 50 or of 150, it's probably going to bounce. There's still a shitload of calls on the chain. It's nowhere near breaking down below any bearish levels right now. And even if we get a breakdown tomorrow, it's probably not going to be huge unless the indexes drop massively. So I would say Google's kind of bullish, a little bit, slightly bullish. Bullish with targets at 150, 750, 160. All right, then Meta. Meta rallied hard into the end of the week. Holy shit. Again, nowhere near delta or gamma neutral. Gamma max is at 542. Shitloads of positive charm at the end of last week, although a lot of it did fall off Thursday. Gamma and delta are positive. On the dealer exposures. Some short put closing. Bot calls are up. This might be close to a top, but I would say that it could run the rest of the way to GM, which is like 542. IV30 dropped a bit. Yeah, so if there's continued resistance at the 530 level, this may trade flat. But a breakout of 530, and it already broke 525, which is putting pressure on the sold calls. So a breakout at 530 might squeeze those off, and then 542 plus is possible if that happens. So this one's pretty bullish looking. I don't see any pullback, but remember Meta's not entirely influenced by its options chain. It's a big It's a big like passive investment company. Microsoft, probably not worth doing, but I can tell you that it looks fine. Netflix doesn't look like it's going anywhere anytime soon. All the options interest on it's still pretty positive. It's starting to get pretty close to its prior all-time highs. I mean, watch for index sell-offs, but otherwise, probably like short puts here or like long debit spreads are fine. Nvidia is kind of interesting because Nvidia lost a lot of really important levels last week. Why is the gamma gotta be lowercase? What did gamma ever do to you? Who uses the uppercase one? How much of your port should you allocate to straddle strangles to aggressively grow your port? I mean, I have an entire port that I just do that with. It's got a pretty decent growth rate. All right, so gamma to the upside on Nvidia is pretty flat. Bullish or bullish on a break of 890 and 900. So this is resistance to the upside. To the downside, things don't get much more bearish unless it falls below 865. So it's kind of in a neutral range. I would say it could go pretty easily in either direction, but the downside interest to 850 and then 830 is a little bit stronger than the upside interest at 90 and 900. But the upside moves could be very, very fast. I believe. Wait 1 second. No. So gamma neutral is down at 830. Doesn't seem right. 870. There we go. So we're slightly above GN. Gamma max at 970. Gamma was just barely so yeah, dealer gamma barely positive into the end of last week. Dealer delta is still pretty high, but much lower than it's been in the past. Charm was positive. So maybe some weakness in the early part of the week. As it tries to regain that 890 level. And then if it can break up through 890, probably pretty stable at 890, 900. Like bullishness, like call delta is kind of shitty. And sold puts have been closing. So I mean this yeah, so this has some support, but only because we're above 870. So support above 870, range to 900. Failure of 870 is bearish. And then the range in between, I mean, you could trade it. It's pretty broad. Tesla caught another bounce Thursday. There was a big uptick in bullish delta. IV spiked up pretty hard. I know a bunch of the Tesla ETFs have a shitload of obligations on them right now. Delta and Gamma. So DN, GN are like 175, 179. Dealer Delta is negative. Gamma is negative. Short puts have been coming in. So this may move again for another test of GNDN in the early part of the week. Charm was pretty significantly negative on Friday, so that should add a little bit of headwinds to any bounce. I would say the setup is pretty similar to what we were looking at not last week but the week prior. Last week was kind of bearish. So we'd be looking for that break at 75, test at 180, and then a break of 180 would be bullish. If that test at 75 or 80 fail, probably back down to like 60, 65. So it's starting to pick up some volatility, but I would say that it can definitely still fail a breakout. We might get even an even longer period of accumulation. I think that's about it for these, right? Yeah, that's most of the Mag 7 out of the way. We can take a look at the memes. The big shorting on GME after earnings seems to be dying off a little. I think it's finding some support here, and we're getting into the end of the ETF FTD period. So there might be a little bit more upside pressure left in this. XRT is still not on reg show. So I don't think that's a consideration yet. Like we're probably not going to see any big substantial runs, but it might get like a little bounce back to 13 or so, which I mean at this point is a significant move. But yeah, I would say that this is starting to at least stabilize. And that would be a move to the upside here would probably be pretty reliant on, yeah, I would say 12 to 13 is possible, but that move would be pretty reliant on indexes recovering some of the drop from last week. Upstart failed 25, which is a pretty important level. Looks like it's been pretty heavily shorted over the last 2 days. Obviously, the news coming out of the Fed right now is not super helpful, and then the fact that the big AI stocks aren't really running super hard puts a little bit more pressure on this. I think we can safely say that the $27 breakout for now is about done. But we'll look for that to reverse pretty soon because it is nearing kind of its it's nearing the level at which it's not going to get much more illiquid. But I would say that probably gives us continued downside range to about 23. Hold on, I need to pull up the Greeks on this. Yeah, gamma delta are negative. We fell below gamma neutral and delta neutral. So be looking at like 21 is probably about as low as it would go. And IV's continuing to be crushed. So we got a lot of short positions moving in. Call delta has been picking up, and a decent number of puts are starting to be sold. So, I would say it can probably continue down to like trend here. which isn't much lower than the current price. And then it looks like participants are ready to support like the $24 level. It could slip a little lower, but they're definitely coming to back this. So yeah, if indexes turn around and this can break back above DNGN up here at like the $24-25 level, that would be bullish again. And then, 2750 is still the level that needs to be broken. But we'll look for a reversal right now. Right now, heavy shorting. Fubo started to get shorted again into the back half of the week. Not a ton. It still looks pretty stable and slightly illiquid. I don't know when their next earning is. I don't think it's on May 3rd. But I would say that we could probably see continued shorting at the $1.50 level in order to stabilize price until next week. But this is starting to recover. And I think if we get a break above 175, that would be quite bullish given the amount of shorting that's already occurred. Top, I mean, they're a failing company, but they are being shorted. Beyond is now, I think, 35 days on Reg Show, which is kind of nearing the point at which I think it's approaching the longest it's ever been on Reg Show. Prices managed to stay above and at like 750 for the most part. We got a little dip below that on Friday. I would say that there could be a little bit more downside available here, but we do have ETF FTDs, like that ACH period continuing out until this Wednesday, and that could be where we start to see some covering. It's very illiquid right now. Yeah, quite. And so, yeah, I would be looking towards any potential covering period for a move up. Obviously, that move up still needs to get us above uh, DN and GN, which have moved. Give me a second. We've got DN at 1129, Gamma at 1232. Those are well, they were contracting, expanding a little bit. Yeah, so expanding a little bit after the sell off, like the index sell off on Thursday. Uh, gamma, gamma, and delta on the dealer side are negative. Charm's positive, so you get a slight bounce at the beginning of the week. Just from the options. Bullish deltas starting to tick up, but it's not. It's not crazy. It does seem to be mostly on the call side, but short puts are starting to be added as well. IV is still quite high. IV 60s at like 134. I would say one of the most important levels right now because of where sold calls are is going to be 8 and 850. A break above 850 is where you'd be looking for bullish continuation. And then yeah, everything else is still pretty negative. So yeah, on the option side, doesn't look like a lot's going to happen, but that doesn't mean we're not going to see any covering on the back end of the ETF FTD period. Gamma max is, hold on, where was that at? That's like 15-ish. Yeah, probably about where it is there. But this is getting quite illiquid. We're kind of in a period similar to this, right? Where they're kind of trying to they're swapping liquidity between the underlying and the ETFs, in order to net out risk and lower the fail to volume ratios. But that's not going to last long, right? That really, they can only do that shit for a few days, before they actually have to start covering some stuff, like T3, maybe five. So that's going to back up, and then yeah, we'd be looking for another test at like 850 or a breakout from 850. Thoughts on bear call spreads on Upstart? I would say bear call spreads are probably riskier than puts, and I think put spreads might have a slight advantage sold under. I mean, under 23, I think the chance of assignment's pretty low, but even under 24, with a little bit of theta, they might be okay. Do you think there may be enough ETF FTDs to push beyond anywhere near the delta flip? Well, as it starts to push up, delta neutral will move closer to spot, right? So when we're looking at that, as price turns around, these will start to move down. And if you break through 850, those should move down pretty rapidly, because we're through the majority of the like near the money sold calls, right? Then you'd be looking at like probably DN somewhere like down at the $10 range, which obviously makes it a lot easier to break through. If no move up this week and beyond, would you exit May 17 calls? How close are they to spot? And if they're at the money, is it not worth it just to like turn them into debit spreads? I mean, I have the historic chart for sorry, I got distracted by a DM. Um if you're at $8, I mean, it might be worth it for you to sell something against those, right? Like, can you sell the $10 against them or something? And then you still have like a little bit of upside exposure, but I probably would have done this a long time ago. But you could sell like April 1910 is like 5 cents. It's not very good, but the 9 is about selling for about 9 cents. April 26th, that's right before the next ETF FTD period. Yeah, I'm not sure Beyond would make it through OPEX without seeing some sort of push. But it might be like, if nothing's happening this week, it might be worth it to sell like an out of the money call against them, at least so you don't have the theta run. Like, you can hedge off some of the theta rundown this week, turn it into like a calendar spread or something. And beyond what price level do you think they may offer shares? I don't know. I would imagine higher than the current price. They're obviously not interested in offering shares at the current price. They had the same shelf offer last year, back here in this like $12 range, and they didn't offer any shares either. Um, so I would say that they probably want to offer shares somewhere above 15, maybe 20. I know they need quite a lot of capital for runway, so it's unlikely they're going to offer shares at these low prices. No problem, ornate pigeon. BNED. BNED looks kind of interesting. It's been starting to get a little bit of covering over the last couple of weeks. Not a ton, but incrementally. It's up about 55% from its low, which is really good, but not amazing. But it is getting a little bit of covering, so we'll see where that takes it. This isn't really ETF exposed. I don't think the tips are all that relevant on it, but it's something to keep an eye on. Riley. Riley looks kind of interesting. This might run up some more. Maybe not. Why do I have that? Oh, I was looking at it for popcorn. Okay, yep, that's about it. Any stocks that you guys wanted to ask about? Commodities have been broadly up. Oil's kicking ass. And if you're following like a broader commodities index, like Bloomberg, it's been rocketing. Um, Definitely already broken out. Next level to watch would be like 105. Oil. God, I hate that. I hate that fucking chart so much. Oil's getting pretty close to its like October 23 high. Um, I would watch the 90 level. I'm sure that'll offer up some resistance. And then 93 is a very, very important level for oil. Any rejection before here, probably back to 80. And then I think fairly stable at 80 to 83. But right now, on a little bit of a breakout. I'm not looking at corn. Fuck yourself. AMRK. Eh. What are their reserves? Do you know? I don't like the platinum and palladium. Just gold and silver. I don't know what kind of reserves they're sitting on, but that's what would matter. CVX is lagging behind because their bid for Hess probably going to catch up to ZOM eventually. No, not anytime soon. There's like Valero that you could look at. Valero's been doing really well. Mm, yeah, I might watch the like 164, 165 level on Chevron. I don't like the risk of them finalizing that deal though, so I've been staying away from it. Any update on Pickle AI? I'm here, aren't I? General update on increasing or entering positions on BTU and various uranium. I mean, I like them both. China's economy is not recovering that fast, so coal's lagging a bit. It did fall below trend, which is fine. And then seemed to quickly recover. I still think BTU's a good bet, but it's um, it's still going to require China's economy making some more significant strides. SRF's consolidating. It may start to move higher from here. I've been targeting buys under $20 to add back to the position that I sold off. I did get like one brief fill at 1950. But yeah, the rest I'm just trying to hit 20 if I can. Um, on a breakout of 22, I'd probably buy more as well. I don't think anything on the uranium thesis has changed. Regarding oil, literally anything could happen because of the situation in the MS of Iran. Yeah, but I don't think that much risk premium is priced in yet. I think a little bit over last week, but I mean, I think even if that resolves itself, oil's still going to just be at like 80, 83 a barrel. I mean, all those production cuts are really starting to take a big effect. I don't know who the fuck you're talking about, elongated plopsicle. I was up twice on BTU, stayed in too long. It's not really something that you want to trade. I wouldn't feel bad about being up and then down. It still has a dividend. I mean, and covered calls are okay on it. Why am I looking at EWW? I don't give a shit about this. You think if the U.S. economy tanks, Mexico is going to rocket? It's not. No, I'm not looking at. What is it? Nickel or nickel? For what? Just because metals are going up? I mean, maybe. I thought he meant Nikola too. I was about to admonish him fiercely. What's your PT for DVN? It probably starts scaling back at like 60, 65. Yeah, like 60, 65. I mean, look at like Henry Hub, right? Nat gas is still cheap as fuck. So quite a lot of opportunities. I think still there for DVN. If oil prices started to retreat rapidly, I might cut some more of the position, but I don't think they're going to this year. I think we're gonna hold like 78 to 83 a barrel throughout the majority of the year, and I think in the back half of the year we might run into some supply issues. And I think by like December we'll probably be running at like a net deficit to oil, like barrels of oil used per day against reserves. And if that's the case, you know, oil's gonna go to like 100 plus. Remember when wheat was a big play? I think I could come back with one or two bad PR from Ukraine. It's really cheap, but the window for soft wheat, which is what wheat is, like the wheat ETN, is pretty narrow. Like there's a window in early spring, which is right now, and then like around late summer. Otherwise, most people only give a shit about hard wheat and not the winter wheat. And so, yeah, I'd be like less excited. Yeah, agricultural commodities don't need to pick up though, unless there's some significant supply chain disruptions. They'll creep up on the back of inflation, but I don't think we're at a point where we need to worry about food supply yet or food inflation. It's just really not that heavily affected right now. I can't believe you want to keep women's basketball on your handsomely rugged radar. Not at all. I'm about 30 minutes behind. I have some questions. I'm not sure if you answer it in the future, and now I'm stuck in a paradoxical loop on if I ask it or not. I mean, it doesn't hurt to ask. Humans didn't invent agriculture. We were domesticated by wheat. Oh, Jesus. PT on UGI? I don't really have one. Up? It's got a compounded annual growth rate of like 11%, so that for as long as I hold it. When it starts outperforming the SPX, I'll consider selling some. How long could gold rally? No reason for it to stop. 3,000? 3,500? I like pack sub 14 quite a lot. It was really nice of them to push UGI down for the drip. Well, I mean, that just came on the back of nat gas prices falling, right? But its recovery looks pretty stable. I mean, go reread my DD. I don't think I need to write it or say it twice. Obviously, if you got in, sub $21, you're in a better price because you've got that positive like 6% yield on cost. But at these levels, at like 25, solid compounder. I don't know, maybe back above 30. I'd probably turn drip off, but I wouldn't. I probably wouldn't. I probably wouldn't sell. I don't want miners. Okay, so just go long gold itself. I mean, I'm long gold and like GLD, and then gold like Barrick because Barrick has shitloads of reserves. Much in the same way that like HBM has like a leveraged supply of copper, Barrick has a leveraged supply of gold. Why not an exchange? What makes you think gold's trading that much? I don't know. Do whatever the fuck you want. I don't care. Don't come crying to me when you lose all your money to a Comex play. That's a terrible fucking idea. Does Palantir still have that gold they bought? It's not very much, but yeah, I think so. What's been on its hair? UGI? UGI kicks ass. Barrick's starting to catch up too. I can see Barrick hitting like 25, maybe 30 pretty quickly, especially if gold keeps rising. It'll start to squeeze off the shorts around 20 bucks. And there's a lot of shorts. Their earnings have been pretty good too. There aren't a lot of good miners, but this is probably one of my favorite ones. All right, let's see what Dork's up to. Oh, Jfresh is already in here. What's up, man? Yeah. Hold on one second. I'm gonna figure out why.
He's near the path of totality. For good luck, he should.
Don't dox me, bro.
I mean, sorry, you live in a state that is in totality, but if he goes to the path of totality, he can put something up his butt for good luck, right? And outsized returns next year in the
Wait, did he get that one through? Was that on
full volume?
Maybe.
Nice. Got him.
Got him. Woo! Did it.
I mean, I just heard you talking about Jfresh's butt and turned you up. So
well, yeah, that's. I mean, it's usually what we talk about. So yeah, we're just talking about dealing with some shitty stuff with you know how Dave are.
Yeah, this week we get this week should be kind of interesting. Everything's fucked. Yields are rocketing. Dollars up, gold's up, oil's up. Indexes also up.
Yeah,
you know,
bonds
just
not up actually.
No, yeah, bonds down. Yeah, Bitcoin up.
Yep.
No one
Wait,
knows
what's
how
it
to.
At right now?
69,846.
Nice. 69.
Yeah.
I feel like that's the appropriate price for Bitcoin.
Well, no one knows how to hedge inflation on Sundays, so.
Yeah. But it's still like its high was what, almost 72, is it 71 and change?
China's not the one buying all the gold. That's a mistake. China's been dumping their money into UST.
So here's my very simple thing about Bitcoin. And why it's at $70,000. So I was just like trying to figure out what the effect of the happening would be, and I was just looking around. I was like, "Ooh, I bet I could look and see." Shit. Sorry, I'm trying to drive and talk to some time. I was looking to see, like, is there any indication of any miners going bankrupt, or kind of trying to figure out through bankruptcy proceedings what their break even would be. And I found this one company that like was in chapter 11 and then was able to get back out of chapter 11 when Bitcoin went from like 15 to about 35,000. So that told me that like 35,000 is a rough, all the miners have different break evens because they all have different cost structures and energy costs and efficiencies and scales and stuff. But like, so I just told myself 35 is that company's break even. So that's probably within a nice, somewhere within the range. And then now with the halving coming, it's still the case where the mining is still like 98% of the reward. So like the transaction costs are meaningless.
Yeah.
So with the halving, you have to either have transactions go for like $2 micro Bitcoin to like $25 a micro Bitcoin, so more than the cost of the coin. Or you need the price to go from 35,000 to 70, and sure enough, we're at 70, and it's like kind of sitting there. So the halving's priced at 70. It's just like even for everybody.
That makes sense. Yeah, I can see. You're cutting out a little bit, but basically he said that the halving is priced in. Yeah, I don't necessarily disagree with that.
Yep. Crypto is an efficient market, isn't it?
Yeah. It's a great way for miners to extract all of their
money.
True. I mean, it doesn't matter. All the miners are fucked. All of the miners are going to spend the next 5 years trying to get back to break even output, and then by the time they come even remotely close, it's going to have again.
Yep.
That was never a sustainable business model. It's actually stupid.
So, well, one, Gert, can you give me a quick rundown of how the pickle jar is feeling so I know whether or not to oppose their sentiment?
I think they don't know. Yeah,
God damn it.
I think the pickle, like here's what's happened. All the bears are bullish, and then all four bulls are bearish.
Huh.
Yeah.
So everybody's scared. That's what you're saying.
Yep.
Okay.
I mean,
Well,
Jackson's still on 12,000, but you know he's the only one.
So what you're saying is strategically go long ball.
Yeah, I guess. Yeah, I mean we're getting some fear, we're getting some doubt, right? The news cycle's been a little bit more bearish on AI.
But are we getting uncertainty?
See,
We have the
I don't
fear and
know.
the doubt.
Uncertainty. Well, I would say that that's
We
probably
gotta get the
highly
full,
dependent on if we get another big down day, right?
okay, can we talk about that down day?
I'd
please
love
do.
to.
Okay, so
I know it's your dream, so I'm gonna let you have it all.
okay, yeah. So I mean, and so that down day was exactly what I've been talking about, okay? Like that was textbook, and you know, we've all kind of been discussing it, but it was so amazing to watch it happen, you know, for realsies. So that saddle that we talk about, right? It like we fully fell off the saddle because we had a big sell off, right? So and it couldn't get reversed in time to recover back to the saddle. Um, so you know, like there was a push right when we hit the bottom of the saddle, and then you know after that we broke through the saddle, and then at that point it was pretty much exactly the right spot. You know how we're saying like a certain amount of selling will cause, you know, the way the saddle is hedged to backfire, right?
Yeah.
Um, and it happened. We hit that point, and that's when the market did the big dumpies. Like after the initial sell off, there was a couple big dumpies of like it was like 60 basis points in 10 minutes.
I
Um,
think NQ went down 150 and 5.
yeah, so that was that exact point right there. And what happened at that point was as what happened for the market maker like dealer hedge is every time contracts ticked up in IV, their delta went up, right? And
Yep.
so, you know, for all the puts, right, that were sold, that means that as people were trying to de-risk them and they were pushing the IV of them up, they were increasing the negative delta hedge. And so that big drop was super outsized because, you know, short puts were trying to get the fuck out and reposition. But in doing so, the market maker was actually, you know, blowing out their spreads and their buttholes every time they would go and close a block of short puts. And that's when so we just had this huge drop in the indexes as that happened, and then for the rest of the day, it was just a battle where people were trying to short out of the money volatility, and then but if because the sell off was persistent, every time their short puts would go in the money and they would de-risk, the delta on those puts would rise very quickly, and you know push the market down even further in sort of a positive feedback loop until right a point at which the sell-off died down towards the end of the day, and they could finally get a foothold on you know the volatility short. And
Once we fell under 5170, they just kept selling the 5170. Like
yeah, yeah,
they were selling like 5170 for Friday. They pretty much stopped selling the out of the money puts entirely because don't forget top of book liquidity on that kind of drop, right? So if they start selling the out of the money put, they're just providing liquidity for the MM to go long puts, right?
Yep.
And so that's why they
Yeah.
started. That's why they started selling the in the money put into the end of the day. And they were selling like all the way down to like 150. They were selling the 170 put the entire time, and then that partially allowed them to recover a bit on Friday when they got
Yeah,
those.
I was fully expecting a bounce on Friday just because of that fact. It's like they're not out. They're still fighting. Like
Yeah, I mean,
the way it ended at the end of the day, I was like, they're definitely still fighting this.
They almost
picked
they almost
track.
lost it in the morning again,
Well,
but they managed to hold.
they picked a contract that what they did is they picked a contract that they knew would probably go in the money, but because of that, the gamma on it would fall off, right? And
Yeah.
so they could theoretically stabilize. Even if IV went up, they could eventually stabilize it as the gamma dropped. So that was probably the plan, was to just crank on that contract. But I
Yeah,
mean,
it's like a slingshot, right? Because if you're selling in the money puts, right, because you still have some uncertainty that they could go out of the money, the delta is below one. But then, like as you start to approach expiration, like you're saying, the gamma collapses, and so delta just like spring loads back to one. So you
yeah,
just get like
exactly.
this like big reversal as gamma collapses.
Yeah, and that's
Which,
that's kind of how the bear flag works, right? So that's essentially what's happening. It's what happened on Friday.
Yeah, and this for you guys that
what?
look at like how that looks technically. You can see the concentration of like accumulation in the breakdown, and then the concentration of like that distribution and the break up, right? These are like opposite moves from the same 5170 position.
What
Yeah,
started the sell off? I wasn't really looking
Kashkari
closely.
said no rate cuts this year.
But
Kashkari
did
said that
somebody
rate
else
cuts were.
was it Mester who said I 3% is my target or something? I saw some
Yeah,
chatter about that.
Mester wanted to, but I don't think her update to 3% was all that impactful. Like it started a little bit of a sell off, but like price was still pretty stable after that. And then yeah, Kashkari saying I don't think we're gonna cut rates this year was rough. Because then
Yeah.
everyone's got to
Well,
reprice all that row, right?
yeah, I was gonna get into that because I think the last tweet I tried to tweet out the other day before I just started drinking at Elevation, and I was in Estes Park where they videotaped The Shining.
Oh, nice.
Yeah, so I got to go see The Shining Hotel. It's cool. But I was also drinking at Elevation, and that was an interesting experience. Never done that before. But anyway, for all of that, I tweeted out just a little bit of the mechanics of kind of what I see as a lot of the ups and downs, especially in pre-market, as data comes out, is just trying to price in a row. So you look at the bond rates, the term structure on bonds, and everybody's really focused on like the 10 to 30 year and trying to see where those are going to go because banks could explode if those get too high.
Yep.
But right now, at least for options, most of the options are concentrated 3 to 6 months out. And most of the uncertainty in interest rate expectations are also concentrated 3 to 6 months out.
Yep.
And so all of those options, yeah, they're mostly intrinsic value, but there's still a significant portion of their value is based on future rate expectations 3 to 6 months out. And so when those change, the value of those change, then the delta hedging requirements of those change. And essentially to first order, if this guy was just sucks. If rate expectations go up, the price of calls go up relative to puts. And so if all the calls are sold, that means the market maker has to sell delta to stay hedged. So rate up, MM sells, rate expectation down, MM buys. And that's basically exactly what we've been seeing in the pre-market for the last week and a half. Every little indication that might change the probability distribution of future expectations of rates have translated very heavily into price, as obviously MMs are buying and selling in pre-market, which makes it look like a ridiculous move, but it's just somebody trying to stay neutral. It's not like everybody's piling in, like, yeah, it's party now, and then the next day they're all like, no, it's over. It's just the MM. I think it's just the MMs trying to just stay neutral, grow expectations.
Yeah, and I mean, it's a
well,
it's
they're
a
the most
good
affected,
indication.
right? Because they're the only person with like large numbers of uh like far out of the money, far dated options on their books, right?
Yeah.
Yeah, I mean, it just goes to show the amount of concentration of leverage, right? Like the market makers are essentially an aggregation of leverage in the fucking market, right? So, when they hedge quick, and so the outsized moves we're seeing, they are outsized because of just how much leverage is packed into their books.
Yep.
So it's crazy. It's crazy shit. But yeah, and that's, I mean, if we, get real fear in the market, right, and long volatility and stuff, then I mean, it's funny because the economic data is going to start having less of an impact while fear is at a maximum, right? And people are just mostly hedging their portfolios rather than, trying to pull yield out of somewhere like their ass, right?
Well,
Yeah.
what's really interesting was how high vol was at close on Friday. I didn't really watch that day, but it's over 16, isn't it? Didn't it close over 16, or was it like right below 16?
Like 3 month or VIX?
VIX.
VIX closed at 1606.
60,
Yeah,
yeah, 1606.
which is a pretty big deal because you're going into the weekend where it should be going down, and then you look at like what the market did, which goes straight up most of the day.
Yeah.
Well,
It's
yeah,
quite
I mean,
surprising.
A lot of
I
the pullback on VIX was like into the end of the day when we failed 320. We fell back into like all those 5200 positions again, right? So that turned vol way up.
Well, so what I'm thinking is, and I took a couple peeks too, and it seemed like most of the action that day was just Meme 7, just the AI
Yeah.
meme play, all those stocks, negative gaps and stuff. So I'm wondering if most of Friday was really just sold calls closing off on like single name stocks and stuff. Because
Maybe. I mean,
because
Nvidia didn't perform very well Friday. I don't think Meta did either. I mean, early in the day they did, but that retreated really quickly. So yeah, you might be right that like we're just looking at like a breakdown in the call side short vol on the dispersion trade.
yeah, I think it's still a risk off. It's like everyone's getting out of short ball, and if that's true, we're in for quite a treat.
Well, I mean, yeah, especially because we didn't regain like 5225 where the bullish SPX positions would have stabilized. Like
Yeah,
we're opening Monday probably, I mean, unless we get a huge futures move overnight, probably around where we closed, right? And that's going to mean that all of that Vega risk, which is concentrated at like 5200, 5190, is going to be like fully exposed and open. And then, I think Charm was fairly positive on Friday's expiration. So that's going to be falling off. And then Gamma's negative. And, that can just like by itself can cause like an initial early morning drop. And if that's coming on the back of like increased like over the weekend volatility, right? Especially with CPI this week, there's going to be more like risk premium priced into vol as well.
yeah,
Then the like market may open with the finding their hedge a little bit short of where they or a little bit longer than they need it to be, and we might see like a bit of a sell off in the market open because of that.
yeah. It should be fun.
that's crazy, dude. We're entering into like
You want
an
to?
actually neutral territory.
Yeah, kind of. You know what's super crazy is if NFP had dropped during market hours, we would have just had another 2% down day.
Yeah.
That 8:30 spike, because it occurred on futures, they were like during futures trading hours, they were able to kind of reverse it a bit. and then eventually recovered into the early part of the day. But if that had happened during trading hours, all of those fucking 5170 short puts would have gotten blown up again.
Wait, what are
Wait,
you talking about? I missed.
So when NFP dropped, it was hot as
What is?
fuck.
I don't even know what
Non-farm
NFP.
non-farm payrolls.
Oh, non-farm pay.
yeah,
Yeah, so
yeah. So
it was hot as fuck, and like a lot of it was
Yeah.
due to part-time work increasing like fivefold,
Oh,
not
really?
full-time. Yeah, so it's like it's like not only is it way too hot, it's also shows like big cracks in the labor market.
Yeah, I also
yeah,
saw there's a lot of government jobs added.
Yeah, yeah,
TLT
70K or
dropped
something ridiculous.
100 points in pre-market.
yeah, yeah. Yeah, so if that had happened intraday, that would have blown out vol again. We would have fallen off the saddle like first thing in the morning.
Yeah.
And it would have just blown up for the rest of the day. So that was the timing of that report was very fortunate for the bulls.
What's
Yeah,
crazy to me is that even if we somehow like entered a bear market like in the next 2 or 3 months, we'd still be like up.
Yeah, yeah.
I
I mean,
don't
I
know.
feel like if we go into a bear market again here, it's gonna be pretty unforgiving. It's not gonna be like October, like August through October, right? Which wasn't
Yeah,
technically a bear market, but it was a huge correction.
yeah,
I think we would actually I think it would actually have to be, because I mean that would imply that inflation expectations are continuing to rise, right? Which means that the Fed is going to have to hike. And I don't think the Fed is in a position to hike like to do like hikes that are moderate, right? Like the Fed either
yeah.
has to, I think they either have to hike to like 7 or 8%, or they need, and it seems like they're looking for excuses to cut rates.
Yeah.
So then they would need to cut back and then what, pass it off to the Treasury to handle bringing inflation down.
Which I mean, how they would do that? They would just have to like, I guess, increase the size of the TGA.
Or Congress could step in. But yeah,
Yeah, yeah.
I mean, Congress doesn't do
yeah.
anything, so I would assume that the responsibility would fall to the Treasury. But yeah, they don't. I mean, they don't have a lot of options. They initiated like a little tiny buyback program last week, which is obviously a bid to save the weaker banks from failure before we hit 5% on the 10-year, right? But long TLT, join me, Guac. They could stop spending money. That's never gonna happen.
I am definitely not long TLT.
Yeah,
Not
me
for a
either.
long while. You know who is long TLT?
Poopy pants.
I haven't thought about it. I haven't thought about it in a while, and I always like to make takes at him because Twitter loves him for some reason. It's a trading.
Honestly,
Oh, that dipshit. That guy's not.
Long TLT.
Is he?
He's been long. He's been long bonds for like 2 months. He longed
Oh,
the top.
so he longed the top like a moron.
Yes.
Well, he is a moron, so it's not. I'm not surprised.
Anyway, okay. So, what I was going to say when you were talking about how the Fed has to raise rates is we're kind of at that spot where I was like jokingly thinking about this theoretically like a year ago. They literally can't raise rates because it will just be inflationary. They'll do what I think what you were implying was, if they're going to raise rates, they have to do it with the intention of breaking something, because just raising rates in a stable way is just going to cause more inflation because it's.
Yeah, they have to like curb stomp the market. Yeah, you're absolutely right.
Paying out so much in interest now, they can't just like slowly raise rates to slow down the economy, because by raising rates, they're just going to be dumping more.
We're gonna have to get George on here one day, but
yeah, I was thinking that, dude. That guy's fucking smart.
Yeah, because I've been thinking for a little while that like if the Fed has to go back to a hiking cycle, there's no like any increases in Fed funds rate are going to be directly reflected in NGDP, right? And
Yeah.
so the only way to sustainably curb runaway growth would be to shock the markets. And
Yeah.
because now that Powell's through his Arthur Burns phase, he needs he needs to be Volcker.
But nobody believes that he has it in him anymore because
Yeah, yeah.
he just totally melted.
Oh,
Yeah.
I mean, but the thing
Fun
is that
times.
if you shock rates, right, like what that does to the fiscal side too, like he's not just curb stomping the market, he's curb stomping the fucking federal government.
Yeah.
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 Well, it's are they truly independent or not is really the question.
I mean, he's not really
Yeah.
curb stomping the federal government. If you think about our deficit being valued in dollars, uh, lowering the value of the dollar opens us up to. It actually opens us up to a better opportunity to lay off the gas pedal and kind of curb our deficit spending.
I mean, sure, but you're assuming that Congress is going to do something that isn't just approving another spending package to pay
I
the
mean,
interest every single time.
Congress doesn't need to do anything if Powell raises rates to 7 or 8%.
I mean, well, okay, yeah. So here's how I've kind of gamed this out, right? And I touched on it near the beginning of the year. So there's like two sorts of outcomes to this, right? If inflation expectations continue to rise, if inflation continues to rise, and the Fed keeps committed to their 2% inflation target, right? Ultimately, rates are going to stay elevated, in terms of the Fed funds rate. And what's going to end up happening over time is that we're just naturally going to get the bear steepener the longer this goes on, right? And then what the Fed risks, right, is becoming completely irrelevant and interest rates going up regardless of Fed policy.
They already are
Uh,
irrelevant.
I mean, they're somewhat relevant. I mean, but what they're really doing, right, fundamentally, is they're just keeping the short end of the curve at a certain spot, right? The long end is just doing whatever it wants.
Yeah.
Um, but the long end,
I think they're controlling the long end a little bit through their rhetoric.
no, well, kind of, but most of the long end control that's happening is through issuance with the Treasury.
Yeah, true.
So,
Little of this, little of that.
but yeah, but ultimately, what's going to happen is over time, as RRP starts to get drained more and more from Yellen fucking raiding the reserves, they're going to have, and it's already starting to happen, where they're going to have a little more reticence to just buy into the short-term Treasury auctions. And she's going to have to start issuing longer duration. And, as that happens, right, we are going to see the bear steepener go full on into effect. And it's going to be chaotic because at that point, the reality sets in that this is where rates are going to be, right? If we uninvert with the short term at 5.25%, right, that is crazy huge deal, where now all of a sudden, right, you have positive spreads on the tail. And that what that means is that debt, right, in the market is going to start being priced in UST again. And that means that mortgage rates are going to go up pretty significantly.
Yeah.
Yeah, I mean, you think about it, for the last like 4 or 5 years, the federal government has increased their deficits at like 6% of in GDP. Why would you take on that debt, the 10-year debt, for anything less than 6% right now?
Yeah, that's exactly what I'm thinking, right? And the only reason why is because there's a spread somewhere else, right? That is worth the
Yeah, the only reason it's not 6% is because there's people with existing conditions that would blow up if it was 6%, and they're just gaming it.
right. They're gaming it, and they're able to, because the currency pair risk isn't high enough for them to be reticent to go and actually enforce a condition that they need, right? And the knock-on effects of doing so are great, right? They're bigger than the sum of the parts is way more than their own individual risk, right? So As soon as an institution decides, you know what, fuck it, we want the current fiscal situation to be reflected in the market, everything goes to hell in a handbasket, right?
Yeah.
So it's going to be an interesting time. I mean, over the next year, right? I expect this to come to a head. You know, inflation really hasn't slowed. The NFP print shows that, you know, we have way more jobs than we have people wanting to do those jobs, right? So
They're all shitty jobs.
yeah, they're all shitty jobs. Inflation is still pretty high, right? And wages are starting to, they're saying wages are coming back in line with inflation, which if we look at your charts that you posted, that just means that the people's recovery and spending power is slowing, right? So
Yeah.
sentiment is going to start reversing pretty quickly.
I don't think sentiment ever recovered.
Yeah.
I mean, I think, you know, one thing Paul Krugman's, you know, that he's been pushing, which I think the data is worth considering, is that there is a huge partisan gap in like how people respond to economic conditions. But I also think that that political affiliation is intertwined with economic, you know, conditions. So like the people that have are more likely to be Democrat and then support Biden, and the people that don't have are the people that are more likely to vote for like a Trump candidate who is supposedly supposed to be draining the swamp or whatever. He's a swamp monster himself, but I think he's assigning, you know, just political bias to try to erase any real like economic angst that's going on. That it's just people that are just, you know, being politically stupid. They're fine. I don't think that's. I think it's probably more likely that you have political affiliations measuring an economic divide that's just been growing. So the people that have been suffering have just been getting more angry. Like I don't think they're getting more left behind.
Well, think about it. I like to think about it this way. Like it comes down to like your political affiliations just purely based on the rhetoric I see are like entirely centralized around your proximity to the issue, right? If you're real close to the issue, right? So like let's say your job's getting paid shit and you're seeing like, you know, work being given out to immigrants and stuff, you're more likely to politically align with the group that says, you know, it's this group of people's fault that your job sucks, right? And that your income sucks.
Exactly. Yeah. Well,
Yeah,
you look at like what are the big political like issues right now. One of them is immigration, right?
Yeah, and
Which
then you have
that's so much about the economy.
yeah, and then you hear, you know, the other side, right? And then mostly if you're like an economist who makes 400 grand a year to sit around and think about these things and you don't ever even like worry about how much money you have, then you're going to be more aligned with the side that says we need to help the immigrants and we need to, you know, provide a you know, social safety net for all these people and, you know, do all this spending to make it happen, right? And you're more inclined to try to improve everybody's situation versus the individual, right? And that's like the political rhetoric is a direct reflection of the economic situation.
I mean, the issue with immigration is that immigration dilutes, right? So yes, the hole grows, which is great for a government that's spending too much money because you can try to grow your way into it, all that money you're spending. But it's dilutive, right? So all the people at the bottom, they end up with even less, even though, you know, in aggregate there's more.
Yeah, exactly. Right. And they're acutely aware of this because of their proximity to the issue, because they're living it.
Because they have to eat.
Yeah. They're busy trying to feed their face and it's getting harder for them, right? And like that's the thing is like a box of cereal costing, you know, $3 more is not a huge deal for, you know, a rich person, but for someone who's making, you know, the median wage and has like 2 kids and goes through like 3 boxes of cereal a week, right? It's a huge deal.
Yeah, like a family-sized box of Lucky Charms is like $7 now, which seems crazy.
It is crazy. I mean, I remember back in 2020 when a fucking or 2019 when a box of cereal was like what, like $3, $2?
Yeah, $3 or $4. Yeah. I'm
Yeah,
thinking about. I've been in the family size era for a while now, but
I
yeah, we've
remember.
actually one fun thing. If any immigrants or poor people are listening now, one fun thing you can do beyond cutting out all the avocado toast and the coffee that's out is you can get a plastic container with a little top on the top, a little pour spout, and you can buy bags. You can buy bags of name brand stuff now. You don't just have to buy the cheap knockoffs. You get like a Charles bag, and you get like you save like 30%. So you're
I
welcome.
don't think anybody should be eating this many Lucky Charms. Anyway, um, Poopy Pants says we should clarify between illegal and legal immigration. They are blurred too much. I agree, but
Sure, yeah.
I will say
Build the
that
wall, don't build the wall. I don't care.
we should
The
just
fact
get
is,
rid of illegal immigration. Like, come over the border, grab your social security card, fill out your W-2, have a great day. That's the easiest way to fix it.
that would be that's the easiest.
Like, if you want to come here, sure, but you gotta fucking pay taxes like everyone else.
That's
Well, the problem is,
insane.
yeah.
I've been saying that we just grant amnesty to all these fucking people, right? Get them a social security number and get them on the payroll and have them start paying taxes, right?
Yeah, but part of the problem is that's what we've been doing for the last 20 years. People are done with it.
We haven't, though. I mean,
many reasons we got it Trump. Yeah, it's like every 5 to 10 years we just grant amnesty.
Well, have you guys seen some immigration posters from like when it all started?
No.
So immigration, right? The whole reason why like our immigration policy started getting like this restrictive was back in, I want to say, like late 1800s, early
because of
1900s.
NAFTA?
No, it was like in the late 1800s, early 1900s. It was a result of essentially the same sentiment we have now on the right, which is where, but it was way more explicit, where it was, brown people bad, and we just didn't want the dirty brown people in our country, right?
Yeah, after all those Italians, we said enough.
Yeah.
Yeah.
Sorry.
So like, I'm trying to find some of the anti-immigration posters because they're incredibly racist.
Yeah, no, there's tons of them. They didn't want there wasn't brown people really. We weren't getting very many brown people in the early 1900s, but they didn't want the Irish, the Southern Europeans, right?
Wait, I'm Irish. That's me.
Yeah. Oh, they fucking hated the Irish. Yeah, those were they were not popular groups, but we still gave them social security cards when they showed up.
I'm the whitest piece of shit I know.
Yeah, but Irish. Yeah. I mean, well, okay, fine, Catholics, which is more specific, but
yeah, no,
I would argue that our immigration policy became the most restrictive because we didn't really do anything, even though the popular sentiment at the time was to not allow Catholic immigrants from Europe into the country. We didn't really do anything to deter them from coming in. Our immigration policies became way more restrictive with the formation of NAFTA, and we wanted to keep labor cheap in Canada and Mexico. And if everybody from Mexico was fleeing to the US, we wouldn't have that next door pocket of unbelievably cheap labor in comparison to the US, right? Yeah. So we can manufacture all of our shit south of the border and pay workers 18 cents an hour versus making it here in the US. And that's when all of the corporations lobbied to keep the border closed.
Yeah, that makes sense.
And seasonal farm work.
I don't know if I could handle pig border as another big something to keep in my head. I've already got big oil.
Big oil, big border.
So Girk, remember that crazy chart of all the squiggles I made from the yield curves and stuff a
Yeah.
while back?
Mm-hmm.
I think I figured out how to explain it.
Okay.
Is it okay if I have you share?
Shoot me a screenshot.
Yeah, one sec. I'm gonna share a couple screenshots so we can kind of go over some various points in the past and compare them to now, because I figured out really what this chart is showing, okay, and the value in it. Okay, so I'm gonna put it in this voice group chat. This first one, let me know you got it pulled up so I can talk about it. Because yeah, so what this chart is showing, right? You got it up?
Not yet.
All right. Yeah, get that shit up there so we can talk about this. Because you know, when I made it, I was thinking to myself, like, is there a way to quantify the value of, you know, paying for stuff in cash versus paying for stuff in debt, right?
Mm-hmm.
And this chart pretty effectively visualizes this. So what we have is essentially the spread between a certain treasury bill and the CPI, right?
Yeah.
So what it tells you,
Well,
right,
expected CPI, right?
no, this is just the CPI, and
Okay.
it's kind of backward looking in that sense, but
Yeah.
I think it does an okay job as a proxy. But what it tells you, right, is those giant squiggles above the green line that turns red sometimes, is that the value of your goods is not going up faster than your interest rates will prohibit you from getting them, right? So if you have like a 0% interest rate on a credit card, right, it makes sense to buy the thing with the credit card over and over again, because your interest payments would not, if you just never paid them, would not accumulate faster than the value of those goods.
Yeah.
So it makes sense to use them, and I'm probably doing a terrible job of verbalizing that, but it's essentially what you're looking at. But when the spread goes below the CPI, right, which is where that line is, what that tells you is that is no longer the case. What that means is that now it makes more sense to buy goods with cash, because the interest rates that you would be paying on those goods annually would be higher than the appreciation of those goods, right? So essentially,
quick question.
it's essentially, what's up?
I think you might be better off using the 10-year tips yield in place of CPI.
Yeah, you might be right.
Because then it would be more forward looking.
Yeah, this is essentially just a look at like real rates, right?
Yeah, I know.
But here, let me post another screenshot now, and this one's going to have the recent data in it, so we can just kind of see what goes on and sort of, you know, how cutting interest rates stimulates the economy, right?
Yep.
So when you cut rates, the value of debt is way higher than the value of the shit you're buying with that debt. And so it purely makes sense to use debt to buy things. But now we're in a situation where we did this in 2020 and we just cranked it to infinity, right? Like, because we figured out that we could. But now we're in a spot where, yes, it's made more sense to buy shit with cash for about, I want to say, almost 2 years, a year and a half, right?
Yeah.
Where it's been this case. But you see those like shaded regions, those have to do with the relative spreads of the different treasuries. When it's green, right, we're kind of in I don't want to say it's a bull steepener, but we're in a setup for like a bull steepener, right? We're bull unsteepening if we're green, or we're bull steepening. If we're red, we have started bear unsteepening or bear steepening.
I hate you so much right now.
I know, Jay Fritz. This is great, right?
Instead of
So
using those terrible words, you could just describe the condition of the yield curve.
The
But
back
okay,
end going up or
yeah.
back end going down.
right, right. But it's essentially long end of the rates, right? When it's going up faster than the short end, you get those red shaded regions, and you could see in 2007 we were in a bond bull position for quite some time before we got a bear steepener. And that bear steepener very quickly led to financial conditions just falling apart, right? And I don't expect that to necessarily happen. If you look in 2019, like right at the turn of 2020 as well, like August 2019, we actually hit a bear steepener for a little bit, right? And then Feb 2020, we bear steepened again right before, COVID lockdowns. And then right as that happened, the Fed cut to zero and all that shit happened, right? The government just dumped money all over everything. So where we're at now, right, in relation to all of this stuff, is that yields are starting to push to the point where it makes more sense to buy more expensive things, right, with cash. When it turns red, that starts to be the case. And what that means is that the leverage that you're taking on durable goods, right, becomes more and more cost prohibitive
I love
in
how
terms of
Dork's voice slows down when he's trying to explain complex things to people he assumes are idiots.
well,
Yeah.
it's a very abstract thing, right? Because we're talking about the appreciation of stuff, right, versus the annualized, this is yield to maturity of these treasuries. And so you're getting a very rough proxy of how much you're paying on your interest versus how much your stuff is going up in both costs and value, right? Like, and a simpler way to explain
This
it
would
is
only
right
apply
now.
to durables, though.
Well, I mean, it's just stuff, and it's a very broad, generalized fucking aggregation of all kinds of shit. But right now, it makes more sense to buy and hold on to stuff than it does to sell stuff or buy stuff with debt.
Is this why you bought a house?
Yeah.
Yeah, it is. It kind of is.
I mean, I completely agree. I mean, all my buddies and stuff are just like dumping money into their homes and their durables. You know, they don't. They're just like, what am I going to do holding all this money? It's just going to go
Buy
back.
commodities?
Yeah,
Yeah,
but you can't. I mean, we're talking about people that like. I mean, you can either throw your hat in the ring.
You want to buy
financial
houses when debt
instruments.
is cheap, not when it's expensive.
No, I'm not talking about even just like houses. Like I've got buddies that are just like dumping money into expanding their houses or like renovating stuff.
No.
yeah. I mean,
It'll pay for itself in a few years.
Dirk
yeah,
is
and
your
that's
golden goose to drive engagement down.
I mean, this is when we're talking about long term, like even medium term, expectations, right? Like this is sort of it paints a picture of what I expect, right? And all things being equal, if CPI stays where it's at, if CPI drops, right, and we actually get back down to 2%, this curve is going to look really weird, right? Because that line is going to go below the T-bill stuff, and we're going to get back into a very muted version like you see in the previous picture, like in the 90s, right, where you have just like this curve that's just barely above CPI, right, where it just makes sense to buy debt and you get growth out of that that is, moderate and stable versus, what we see now, which is where you get growth that's explosive, right? But then when we contract back to those points where getting leverage doesn't make as much sense as just having stuff, when you get back to those points, as like, let's just say you're like a business or something, right? It becomes excessively prohibitive as the long end increases to go and like buy a new like press or a lathe, right, and use debt to do it. You want to use cash to do that. And if you don't have the cash to do that, you're not going to be able to, say, expand your operations. Even if orders go up, you're just going to have a big backlog. And that's exactly what we saw in 2020, along with like supply chain constrictions. We saw people getting orders for stuff, but just getting these huge, huge back orders and backlogs of shit because they didn't have enough stuff to make it and they didn't have the cash to do it. And in 2022, we saw the economy contract because people reacted to the higher rates, but also people didn't have the cash for increasing and expanding their operations. And in 2023, we saw that sort of relax because people actually, when they look back, they're like, yeah, we still have some money. The debt's not too crazy. But as that long end goes up, that stops being the case, and you start getting real contraction.
Now, Doric, what if I were to tell you that I think that your little lines are all just gonna go like this? Well, hold on. Where is it?
Yeah, show me what you think the lines are gonna do, and I'll show you what I think the lines are gonna do. Ooh, if that happens, yeah, we're gonna get a financial crisis and then another explosion.
Yeah, that sounds way better. We won't. No explosion. Just years of drawdown.
No, we would get a financial crisis if that was the case, because
yeah, we will, but no explosion. There's no money that can come to bear to save us.
Well, then we're gonna have then Peter Schiff's gonna be right, and you're gonna look like an idiot.
How am I gonna look like an idiot? I'm long gold. I'm not stupid.
Because you see Peter Schiff's an idiot, but he'd be 100% correct if your thing played out.
Yeah, but to be fair, Peter Schiff's been long gold for like 20 years.
Yeah.
That's true. He was early, but he wasn't wrong.
Sure.
But I think what's going to happen is we're just going to get the bear steepener, and then the Fed's going to cut rates, and hopefully what happens is we get something more akin to 2001 to 2006, and then ideally, because I want to stay optimistic. Ideally, over the next 5 years, right, we very slowly sort of equalize interest rates to economic growth and inflation to where we.
So you want this? You want contraction to occur? We get somewhat of a financial crisis.
Yeah, it's some sort of
extended recession into very muted, slow growth in the long term.
I mean, yeah.
Yeah, this would be ideal if our Fed wasn't retarded.
So the fact that we're bear steepening right now, right, what that tells us is that this is the expected outcome, right? And we can get off these charts and just look at the yield curve to sort of see the same thing. But eventually, right, long-term debt is going to be more valuable than holding on to stuff. And once that occurs, the cost of money is going to go up significantly.
You don't have this back to the 80s, right?
I do, but let me hold on. Let me see if
how far back. Go back as far as you can.
I mean, the way that I see it though, and I'm not thinking super far out. I'm thinking more about the mechanics of what might happen if the Fed actually drops the interest rate. I mean, I think a couple of things. I think
currencies collapse. That's what happens.
Well, I think in a large sense, like from a consumer's perspective, like most like the median consumer is living paycheck to paycheck. They're going to spend all their money on whatever they need to live, regardless of what the rates are. So in that sense, there's not going to be a huge effect there. But what it will affect is all the people that are like waiting to, jump into homes, waiting for rates to drop. They're just going to start jacking up the cost of living again once rates drop, and they'll be even more screwed.
I think you're right, but so here's the chart going back to the 80s. Those two, there, you only have the one in the 10-year back then, like in terms of all the different treasuries I'm looking at. But So you're seeing like the 1-year spread and the 10-year spread. So you can see pretty clearly where Volcker did his Volcker stuff. And then the period that went past that, right? And that's sort of what I'm hoping for is something along the lines of that evolution, right?
Hmm.
And then the Fed put, right? The Fed put is discovered in the 90s, and that's when we start getting into the sort of boom bust cycles that we're seeing. And then 2008, right, or 2000 into 2008 was when we sort of saw the first like really big bust cycle out of this loose monetary policy. Um, we were okay for a while because no one really like before, the aughts, right? No one really thought to themselves, man, I want to encourage America to lever to the tits, right? People weren't really thinking that too much until the aughts when they were like, well, you know what? With rates as low as they are, we just want volume, right? To be able to, make our nut. And that's when things started getting out of control. And nowadays it's just times infinity, right? With how much we're trying to get people to lever their fucking up to their eyeballs in debt.
I think what you're really trying to say is that economists have ruined everything by
Yes.
giving the Fed economic theories that aren't real, that they hold dearly and act on swiftly without hesitation or doubt.
I mean,
Yes,
this is
that
this
is
is
that is
this
correct.
is the effect of putting like new Keynesian economic theories into practice in, you know, in the world's largest economy, right? Um, we're accelerating towards the inevitable point of failure, regardless of whether or not we have 2.5 or 3% inflation. True top. Thank you for becoming a Cornishon. But yeah, I mean, obviously the baseline rate of inflation at 3% has been projected for a very long time, and we may finally be realizing it now. And COVID rapidly accelerated the creation of money, which put, those economic models 10, 15 years ahead of where they should be right now. But it's not a sustainable path, and we are going to create, hyperinflation on the back of, federally funded unchecked growth if we don't do something to curb it now. Um, and
Yeah, so
Yeah,
so
you're
and at least Powell, and I think even that's not even a controversial point. I think
I
everybody
don't think that's
believes the
controversial
government.
at all.
But I mean, and I've said this before, and I just want to say my piece. I get out of my system. We can move on. So nobody likes to hear me say it. But I mean, from an experimentalist point of view, I mean, the fact that we had this huge impulse during COVID is such a treasure trove of information, right? Because so much of economic data is noise. And here you have this massive signal that's piercing through the noise that we can use to, to actually evaluate what is the effect of this clear signal. And I just feel like everybody's wasting it by just trying to apply their existing theory to it instead of actually testing theories. Anyway, that's my piece. I hate it.
Yeah, there's never a lot of it's you know what, like economics is as it is approached as a science. You're right. It's kind of like the way most physicists treat like Einstein, right? They just think that that's the de facto. Very few people try to challenge it. And that's the same with like Keynes and economics. Like
well,
no
so
one no
here's
one wants to buck the system because it makes it harder to write the papers.
well here's the difference though, is that what we did, right, when a new theory comes out, the thing that happens in an actual scientific field is everybody is extremely skeptical until it is proven, until it makes predictions that are true, right? So with Einstein's field equations, the first thing they proved with it was they used a solar eclipse to see if Mercury's position was shifted by the gravity of the sun, and that was proven. They were like, okay, cool, it's got some merit. And then what they did is they actually calculated to extreme precision, to arbitrary precision, pretty much, the precession of Mercury's orbit. Before relativity, it was we couldn't explain it, but now we can explain it with relativity, right? And we're like, so this theory does actually explain the real world versus what economists do, where they come up with a theory, right, that makes predictions, but then what they do when those predictions fail, instead of say throwing the theory out or trying to understand the fundamental mistakes with the theory, they're just adding on extra shit to try to explain the issues with the data, which is the absolute epitome of bad science.
Yeah.
Like
Yeah.
you keep adding constants to the equation, or you add different terms to the equation and convolute it beyond belief. At some point, you got to take a step back and say, "Hey, wait a minute, we're making a mistake."
Yeah, that's how we got. That's why we measure inflation expectations. It's just bad theory building.
Yeah, it's like a little kid, right? When you're playing it's like the scene from Dumb and Dumber, right? Tag, you're it, no take backsies, triple stamp. You can't triple stamp a double stamp, like it's literally that.
Yeah. Pipi
So
says, don't brush over what he just said about the rates. Stop trying to get confirmation bias for your long TLT out of me. I'm already long slightly on TLT, but I'm still largely net short.
TLT, I like TLT below $85. That's where I
Yeah.
like.
I would probably go more long below 85, but I think we've got a much longer way to go down than that. I think we could see
I think you're
TLT at
right.
like 70, 65 before this is all said and done. It may not stay there
Yeah,
for long, but I think it can happen.
I think a volume weighted average TLT entry price of around $85 to $80 is just a good place to be, honestly.
Here's the deal. If Powell doesn't shock the markets, we're going to get our debt downgraded. Both of those things are going to push the top end of the yield curve sky high. So I think the Fed is looking at the decision, do we blow up banks or do we blow up the faith and confidence in the U.S. Treasuries? And I think just inherently the way banking power consolidates at the Fed, right? The more advantageous move is to blow up the banks. Now they've bought the banks a whole lot of time to get above board, but that's running out. And if they run off the balance sheet, it's the same story, except they probably destroy even more private equity. So I don't think a balance sheet runoff is going to be the correct choice. I think the correct choice is cut to 3% and leave it there. Never touch it again. Or 3.5. Or raise rates to like 8.5. 7 to 8.5. Depending on how high inflation gets over this spike. That'll be the hardest thing, though, is they're going to have to raise enough to ensure that rates remain restrictive and above the rate of inflation, right? So, say 6-month inflation expectations right now, or 6-month CPI right now, or super core is what, like 5.9? It's somewhere around there. That means that they need to be above 7.5. Japan's probably going to raise. They don't have a choice. They can't take on any more of the US's inflation. Their last, like the last Tokyo inflation report, which isn't obviously the whole country, but it's the most up-to-date data, and it's generally very representative of Japan's overall CPI, is up already above the Bank of Japan's like long run target.
Yeah, I mean, ultimately, yeah, the end game, right, of this whole crazy economic cycle is to prevent stagflation, right?
Well, yeah, I mean, a period of stagflation wouldn't be the worst, but I don't think there's an argument that we're already in it. I mean, it really depends on how you look at the data and how you weigh the historical precedents, right? Technically, all of our current NGDP is being funded by the government with debt, right? If you take away that deficit spending, we're not growing, but inflation is increasing. right? And that's not really built into prior economic models because COVID and the fiscal impulse that came after it are novel events, right? And so everybody's always like digging in the past to try to figure out what we can expect, but I don't think we have the tools to measure this in prior economic models.
No, we really don't. I mean, like Jay Fresh said, it is an amazing piece of data. And what's interesting though, Jay Fresh, what I find interesting is that and a piece of value to the continuation of it is that we haven't changed our policies based on the impulse, right? Besides rates going up. So that gives us a treasure trove of the full sort of response function to the impulse.
Yeah. Yeah.
So that's pretty amazing. If you can adjust for interest rates and stuff, you can end up with a beautiful response function. So it's cool, but the downside of that is, yeah, we're continuing to be irresponsible, right? And continuing to operate on models that assume things like deficits don't matter, right? Which is about the worst thing you could ever possibly say. Even if you are the dominant currency, that's how you lose control of your debt market. So, anyways, that's long-winded way of saying that interest rates are going to go up regardless of Fed policy is my expectation.
Yeah, I kind of agree with you. And then the question is for how long? Like we could see mortgages peak at like 13 14%, right? But they're probably not going to stay up there that long. I mean, enough to do some serious damage to people's equity, but it's not like they're going to stay up there for like a decade or something.
No, if that starts
Because if we
happening,
get a recession or a depression, inflation is going to come down very, very quickly, right?
yeah.
And the Fed rate will follow. But I mean, what the Fed hiking would do is say we're pushing for a recession. We need a recession to happen here.
Well, what they really
And
need is financial conditions to actually tighten down, which hasn't happened.
yeah, yeah, I wrote a big thing about that a while ago.
Yeah, I mean it's pretty clear that I mean there were firms tightening credit for all size entities, but that has stopped, right? And ultimately, even though they may have been tightening credit conditions where getting a loan is a little bit harder, they did not tighten down on the amount of risk they were pricing into that credit.
Well, think about here, Jay Fresh will like this, and this is something that I brought up in my beginning of the year predictions, right? And everyone was really confused because it looked like the soft landing was much, much harder than the hard landing, right?
Right.
But in terms of the Fed cutting rates or not cutting rates, you have your soft and your hard. That doesn't mean that they have equivalent effects on equities. But if the Fed cuts rates, which would theoretically be the soft landing, that's the inverse landing condition for M2 velocity, right? So if we think about the fiscal impulse and the velocity of M2 and how that drives growth and inflation, the Fed cutting rates is the hard landing for M2 velocity. Velocity will just drop off the map. Um, there will be very little excess trade, especially in financial markets. You're going to collapse every currency spread because they're all against the dollar, right? Not just Japan, all of them, right? And if the Fed cuts rates, we're just going to see growth go to nothing. Inflation will drop really quick, right? But we're also going to see this just huge collapse in growth and M2 velocity will follow suit, right?
Huh.
I
I
knew you'd
thought
love
about
that.
that.
Yeah. So like I said before, I think either way the banks fail, right? Banks have leaned into equities to pad their duration risk, right? And equities are up, and that's given them some time to roll over their net losses, but not enough time, because we know they're, as of that report that I wrote the DD on in December, they're still massively at risk. It's just that that like break even point for that risk has moved up, right? Back in 2022 it was like the 10-year at like 4.4%. Now it's probably about like 5.1. But either way, I think that duration risk is gonna be felt. The treasury's implementing like buybacks on longer duration notes in order to try to ease that. It all comes back to that same thing, right? But if you collapse all those currency spreads, you don't give any outlet, and financial conditions will immediately just snap shut. That's what's going to happen with the drop in M2 velocity, right? Is financial conditions are going to go from relatively loose, where they are now, to tighter than they've ever been, very, very quickly. And so, and that's, that punches equities right in the dick. Risk assets are just going to fall off. It won't matter. Growth, none of the financial metrics that people lean in, it'll just be irrationally fearful the opposite way, just like we've seen over the last 3 months, hoping that everything gets better. And that could persist for a long period of time.
It'll persist as long as money costs money, right?
Yeah, well, money will cost an extraordinary amount of money, because I mean, there will be like no lending market if that happens. And so, I mean, that's why the Fed hasn't cut already.
Yeah,
Um,
that's very true.
yeah, it probably has very little to do with the inflation expectations, right? Inflation's just a risk that they need to raise a lot more sooner, right? But they need to create a shock one way or the other. They both create shocks.
Can I just address? So Sisyphus is saying both candidates are spenders. We will not stop. Um, and he thinks that the Fed won't have the balls to do what is necessary.
He's just been going off like all day.
I know, but I just want to address this, and this is what I'm thinking, Sisyphus, is I am gaming this out when I say that rates are going to go up regardless of Fed policy. It's because if everything stays equal right now, Fed doesn't do anything, the government keeps spending and all this shit, inflation's going to go up, and the market is going to demand more yield in order to keep up with inflation, right? So you will get the long end moving up regardless of Fed policy, and then as the RRP drains down, as Treasury requires more and more,
RRP will never drain. It will never empty.
It could.
It
could.
It won't. We have too much money in money markets.
Okay, well, so it could, though. It could. So here's how that happens. We uninvert at the 5.25% level.
You're talking about money markets failing.
No, I'm just talking about money going out of them. But yeah, they probably will fail. But, that's a liquidity crisis, and that's fine. We can have that. But ultimately, if the long end uninverts at this level, the RRP will disappear, and money markets will be just drained because everyone's going to want the long-term debt. Right. And so that's when we get that really flat sort of deal. But the way we would get it this time is much more bearish than at other periods, because the cost of money is going to go up significantly.
I think it's better to push money out of equities in like this is why. So if we're going to weigh the Fed's decision-making process, cutting rates is far more dangerous than raising them.
Yes, absolutely.
Yeah. That's kind of what I was getting into by talking about the hard stop in velocity, is that if they cut rates, and rate cuts are the same thing, they can't do it. There's no slow path. They just need to revert to their long run inflation expectation, which they need to raise. They can't cut rates to 2%. They'll have to cut them to like 3 or 3.5. And that's really indeterminate because we still don't know the full effects of the fiscal impulse. Or they need to raise rates. But they need to raise them so much that there is no that they have incentivized risk on into duration.
Right. Right.
Which means that it needs to be drastically above the NGDP and our long run growth rate. So they have to raise rates beyond the fiscal spending, beyond that GDP push. Exactly, Volcker. That's what Volcker had to do. He didn't have a lot of choices, right? And JPOW's, I mean, after their decision at the beginning of this year to see where inflation went, I mean, that was just buying banks a little more time. There's a reason they cut off the bank's liquidity from the BTFP in March, right? Not that they couldn't have extended it. They could have. It's just that the Fed's prepping to not hold the bag for the banks. So they bought the banks an entire year. They, gave them as much liquidity as they could. We got the, they gave them the hawkish rhetoric in order to roll up their long-term debt positioning. They had 3 months of skyrocketing yields at the top end of the curve from August to October of last year, right up until the literal point of their failure, which was at the 10-year at 5%, where we'd start to see larger banking entities fail. And then they flipped dovish, right, which should have generated tons of profits for those banks as bond values crashed from October all the way through December. And now they're prepping to no longer hold the bag. And the best way for them to do that is to raise rates beyond the long-term growth rate.
Yeah, and that's I mean, indexing the Fed funds rate on the growth rate is a much better indication. Like, real rates are not, the Fed funds rate index to CPI. It's real rates are the Fed funds rate index to GDP growth.
Yeah,
I kind of got that feeling. I'm glad I'm not alone in that. 'Cause nobody's really saying that. Everybody seems pretty convinced that the real rate is CPI. I don't understand why that necessarily has to be true. So it doesn't seem.
I don't think it needs to be true. I think that's just the assumption, right?
That's the dogma.
Like this boils down to everything you hate about financial mathematics is somewhere always an assumption is made.
Well, that's true of everything, right? But
Yeah.
You just have to test and feel comfortable in your assumptions.
Yeah, well,
Even
finance
though
tends to be very
honest.
comfortable in its assumptions without a lot of testing.
Sorry, Dork, but the real world doesn't run on physics. It runs on assumptions.
It runs on vibes, you mean?
What will the Fed put look like this time around? Just let regionals be absorbed by GSIBs? I mean, I think the Fed's going to have to absorb a pretty significant amount of the current U.S. banking system, and maybe even some GSIBs. I mean, some of the bigger banks could absorb, they can take some of the hit, but they can't take all of it. Like the Fed, socialized banking to a degree.
So here's the real danger. What if central banks need to be bailed out in other nations?
No, we don't. We
I mean,
let them
isn't that
fail. I mean, the IMF might step in, but
wasn't it like the Netherlands or someone that did that recently? There's a central bank that just got bailed out, or they're asking to be bailed out. I don't know. I thought I read that somewhere in Europe.
What level would the Fed have to raise rates to if they did one more big hike? I mean, they need to get it above the long run GDP, and they probably have to assume that deficit spending is going to remain unchanged. If they don't, now this is the biggest thing. If they don't choose either path to tighten financial conditions, the U.S. will face probably a series of consistent downgrades in our debt. And that will do the same thing.
Yep.
Regardless of Fed policy.
Actually, that might be even way worse. That's you could see U.S. yields move. You know, that could be a lot worse. Because that's everybody's debt will get downgraded with ours because everyone's a holder of our debt, right? We've insured that. So that's a global. Yeah, we don't want that. I don't want to get into all the details of the effect of that, but basically, that would mean rates are going to go to the moon and they're going to just stay there until we can get ratings back under control and get upgrades, and that could take forever.
Yeah, no, that could literally take. It would go on until austerity measures, right?
Yeah, we would probably, and I can't see America facing austerity without violence.
Yeah, no, for sure. Yeah, that's the absolute worst case scenario. Game this out for 10 years, what we're doing now, and it's just going to get worse and worse until people do get violent, right? I don't want to think about it too much.
Yeah, I mean, you're already going to get tons of turmoil in emerging economies, right? If that happens. So the best path forward, and this doesn't mean this is the path they'll take, but the best path forward for the Fed is at some point this year to shock the markets and move rates up substantially.
Yeah, do it before the market does it.
Yeah. Well, the market's already doing it, right? The Fed's still on we're pricing in 2 rate cuts this year path, and we're the market's pricing them out.
Yeah.
Well, or 3 rate cuts, and now the market's pricing 2. But I mean, it's getting worse. The market doesn't believe the Fed anymore, and there's no one there to assume the risk at these prices. And that's kind of a chart I posted on Twitter. I didn't actually post it. Let me see if I can pop it open. For everyone here. This chart. And this is one of the things we're seeing right now is we're seeing central banks buying up a lot of gold, right? And this is why we have gold going up. And this isn't a diversification process. It's far too much money being put into it. This is a forward inflation expectation and currency risk hedge, right? And it's definitely not just the Fed, right? This is central banks all over the world are moving to increase their gold reserves because they expect currencies to falter. And the rate at which they're increasing is pretty substantial.
So what you're saying is we need to buy not just Nvidia stock, but we need to buy more ancient currency.
Yeah.
Yeah. I think it means we need to buy MicroStrategy stock.
Fuck off. I'm not buying until he dickhead sold all of his shares. Why is everyone so bullish on MSTR? Like, so he's converting his shares, which are 50% Bitcoin, into dollars at a rapid rate. And somehow people think that's bullish. Like sailors sold so much fucking MicroStrategy lately.
Well, yeah, it's free money.
Yeah, I mean, but like I don't know why people have a bull thesis on that.
You turn something worthless into $7,000. What can be better than that?
He created an arbitrage engine for the Bitcoin market, and now he's profiting off of it. Right?
Love it.
Yeah.
It's pretty smart.
There's nothing more American than making money off of useless shit.
Yep.
I feel so patriotic right now. I might just buy some MicroStrategy just because I want to be.
You're not a true American if you're not getting fleeced.
Right, exactly.
So, like, my mother, she's retired. What do? Her FA has her deep in equities. Tell her to move to a more risk averse exposure.
Yeah, commodities are great.
If you're
Commodities,
almost retired,
gold.
you shouldn't be neck deep in equities.
Yeah, you
Yeah.
really shouldn't. But I mean, she should be looking towards like fixed income. And
Yeah,
I
or at
mean,
least have a
if her
strategy in place.
financial advisor isn't telling her to look into fixed income, and he's got her overweight equities, I would tell her to get a second opinion. I mean, I'm not
Yeah,
her financial advisor. I can't tell you what to do, but I mean, I'm in my
maybe she just doesn't
30s.
have maybe she just doesn't have a lot of money, and that advisor's just like, well, either this works out or you're screwed anyway.
Well, I mean, it'll be great if the dollar goes to nothing, but otherwise,
Well,
rough.
so would commodities, though, right?
Yeah, yeah. Well, commodities are valued in dollars, so it depends. It depends which commodity. Dollar-denominated commodities, not so much, right? But um,
Well, no,
anything.
those will do amazing, right? Because dollar value going down means commodity price go up.
That depends on growth, right?
That's true. Oh, that's true. Yeah, that's true. If
Yeah,
demand tanks, then yeah, you're fucked.
yeah.
Except
But
if like oil.
like I'm in my
Like I said
30s and I
before,
only have like 15% equity exposure right now.
I mean, like I said before, mega cap monopolies kind of make a lot of sense in an ultra inflationary environment.
I mean, they do, except for the part where the mega cap companies these days don't actually make a product that makes money, except for like cloud services.
Yeah, that's true. Can't eat the cloud.
That's true. Yeah, the clown.
Yeah, I mean, I can't give her much advice besides get a
Yeah,
second
tell her to
opinion,
go.
but I would
Yeah,
definitely get a second opinion.
Yeah.
Tell her to find someone more bearish and then maybe do
do
like
something halfway in between.
yeah, find something in between there because nobody nearing retirement should be overweight equities anyway. And then in the current macro environment and also approaching retirement, not having any kind of fixed income exposure seems wildly irresponsible.
Fixed income and inflation hedge, honestly, are the two, especially when you're about to be retired. I mean, or you are retired, like you're the thing is the you don't want to just like, have a static amount of money yielding you a fixed, percentage of that money. You want some way to hedge that against inflation because fixed income suffers the worst from inflation, right? So, you know, you need something in there to hedge that. I mean, whether it's tips or,
Yeah,
commodities,
I
you
was
need
gonna say if she doesn't know what a tip is, she should get a second.
yeah.
Yeah.
But yeah, we are not financial advisors, and that's not
No,
financial advice. We're just giving you our opinions.
well, I mean, I would be comfortable saying that my advice is to get an opinion from an actual licensed here.
I mean,
Yeah.
I have of my equities that I own, I'm like it's like 15% total weight equities in my like long-term holdings. I think 6% of that is utility exposed, 5% of it's energy exposed. Um and then maybe like
4% Nvidia.
huh? No, I have QQQ.
Same
Um
thing.
yeah, but pretty much is the same thing. I'm probably gonna sell that. I have some commodity exposure too. But that's I mean like I don't really have any outside of the like small allocation to QQQ. I don't really have any like tech or um like long-term growth investment exposure. Like growth seems terrible at these prices and I've already scaled back like 30% of the QQQ I did own. Um, and I'm probably going to sell just all of it. And with the 10-year above, if the 10-year moves above 4.5, I'm probably just going to start buying duration again, slowly, but um at least that guarantees me like the future value above the long, like future value of my dollars above the long run rate of inflation, if the long run rate of inflation is in excess of 3%, right? So I won't lose money doing that.
Yeah, that's a very yeah. So what Girk's basically saying is he has a very low risk, like fixed growth that is hedged to inflation with his commodities exposure, but at the same time, being able to secure a risk-free rate above the rate of inflation, that alone is very valuable in preserving your, essentially cash reserves, right?
Yeah.
So,
And I mean those are leverageable products, and if something drastic changes, I can always use those as leverage towards equities and move my position more into equities in the future. But I wouldn't want to be overweight equities here at all.
yeah,
The
or levered into them
smallest
right
the
now? No way.
smallest part of Girk's port is probably larger than a lot of people's full port. I mean, I think like my total QQQ is maybe it's at like 600K right now.
It's disgusting. You disgust me.
Well, I've had it for since like 2022 I bought it. I've got to why? I mean, I've got to have something. I can't just be like long
No,
Nvidia puts
you disgust me
forever.
because it's disgust me because it's 600K. It's like a fraction.
Yeah, that's worth more than my house.
Whatever.
You're rich and out of touch.
Rich and out of
What's the banana
touch.
cost? $10?
I don't buy my own
Well-
bananas. What are you, poor?
Oh my god. Yeah,
I'm-
but I mean, so and all this shit, I mean, this is all good and dandy, but I'm sure at least 3/4 of the people in here right now that have suffered through us talking about this incredibly interesting stuff only want to hear when down and calls or puts, right?
Yeah, I mean, ultimately, at the end of the day, this is a trading Discord. Although I do think that there's a ton of value, even though nobody listens to this stream anymore because it makes them buy puts. I do think there is a ton of value in these discussions and understanding kind of the ebb and flow of the overall macro conditions, and that is meaningful to you as a trader as long as you understand them. It's not something you need as a trader, but it is important to have an idea of what's going on behind the scenes. It will make you a better trader. If you don't hear all this in full port puts, it will make you a better trader.
Yeah, no, it helps you develop a plan, right? Because volatility, pretty much what this means as a trader is that volatility expectations should rise and volatility should rise, right? And knowing that can give you an idea of how to profit off of it.
Yeah,
Well,
and
I
if
mean-
volatility on indexes is rising and volatility in bonds is rising, that means that equities or risk assets are going to suffer. And so you're saying long leap call guy should become leap put guy. I think he's been buying both puts and calls. He's been short underperforming sectors, long underperforming sectors, short overperforming sectors.
Yeah, so I mean, speaking of volatility and trading, I mean, an interesting thing that's been playing out now for quite some time.
He doesn't belong here.
Like I would say about a few months would be, if you look at just the VIX. I mean, obviously, in November, December, VIX got destroyed and like just mashed into the dirt. But then you see like these spikes in VIX, and then it recovers a little bit, but then it spikes a little harder, and it recovers, then it spikes a little harder, and it just keeps doing that. Every spike gets just a little bit bigger, and the suppression of it gets just a little bit less effective. And so I think we're very slowly entering into just a situation where short VIX is starting to go unstable. So the volatility of VIX is starting to rise unstably.
Tons of volatility, Narwhal. So as a trader, especially as an intraday trader. That's awesome.
Yeah, that's huge.
And JFresh, yeah, you're right. I mean, we are, and I still think some of our best measures of that have been those two things that me and Dork built that I know you hate because they're oscillators, but that forward yield of volatility that we look at, and it kind of climbing up and up,
It's
and then
positive now. It's pretty firmly positive.
yeah, it is. It has been positive. Well, it ended just shy of positive, I think, Friday. Like they got it. They got it
Uh,
back. Yeah, they got it back to negative. Oh no, they didn't.
oh no,
Positive
yeah, when futures
0.25.
closed,
Yeah.
yeah, when futures closed, it was positive, right? That was very interesting to me is that it didn't go negative after VIX was not being recorded anymore.
Yeah.
So,
That's actually kind of well. We base this off of VX, not VIX. But
well, it's VIX and VX.
well, this is no. I think. Oh, maybe you're
Nope, it's
right.
it's VIX, it's VIX and VX, yeah.
Okay.
So we are basing this off of like it's like a spot 1 year, and I try to do the same thing with the green line too, but green line's a little bit tougher.
And then also this, like our correlation, that's been slowly increasing as well between VX and VIX. Still
Yeah,
very,
that's really
still
interesting.
probably statistically relevant to the negative side, but um, it has been creeping up. So yeah, I think we're definitely moving into a different volatility regime than we've been in for the last year, almost a
Yeah,
year.
I mean, when this correlation breaks down, which it is breaking down now, um, what's going to happen? Vol is going to get more and more unpinned, and you're going to see volatility convexity traders, right? Basically bond traders, right? They're going to start doing the thing they do, which is long bond, long vol,
Yep.
right?
Yeah, and long vol begets more long vol. There's so I've talked about this before, but I should bring it up again while we're on the subject. Short vol has diminishing returns. Eventually, you hit a point at which volatility returns just kind of peter out when you're short vol. Um, long vol has advancing returns. So when people start going long vol, vol just keeps going up until people stop going long vol. Um, and the returns expand the longer and longer people go vol, and that theoretically infinitely, but eventually enough of the market will agree that vol is too high in the short term, and they'll short vol into the future, right? But I mean, usually this is very rapid, and this is very slow.
Yeah, it's just been kind of interesting to see, like very slowly, every single time they catch the knife and drag equities right back up, it's a little bit more tortuous and a little bit more scary. Like,
Well,
are they gonna
that's because we have the yield curve. Well, we have bond values going down, right? So that means marginable securities
Yeah,
are
yeah, yeah,
falling
yeah.
in value, which means leverage is a little bit lower every time. It's all connected, and I think I can say something that's very true about at least the three of us, and I hope some of you guys is, as boring as all this shit sounds, I think it's endlessly fascinating because this is man's greatest achievement. This of all the things we've ever built, the pyramids, bridges, art, the world's financial system is our most complex um and hmm, it's our most
Same.
complex and largest
Yeah,
achievement.
ubiquitous.
Yeah.
You can, like every single person in the world is attached to it, whether they like it
And it affects every single facet of your life. And for all the people out there that don't understand it, that don't get it, that don't pay attention to it, they're missing out on truly understanding what influences their daily lives, right? I mean, it's your retirement, it's your value in the labor market, it's the cost of your food, it's whether you can go on vacation, it's everything you do is tied to this, unless you
This is
live in a
something
hut
that
off
this
the
something that makes
grid.
me this makes me a little angry though, and not just for myself because like you said, I get a lot of enjoyment out of studying this infinitely complex piece of shit that we put together. But I mean, for most people, I mean, just the expectation that everybody would have to be knowledgeable and understand the system. First of all, it's just unpractical, but it's also just kind of bullshit, right? I mean,
Yeah.
and the fact that you just can't you can't just say, I don't understand the system, I don't trust it, I opt out. You just can't opt out, and you're forced to just operate within the system that you
Yeah.
just everybody just doesn't have the resources to fully actually understand and respond within it.
I don't think anybody
Well,
on the
So
planet fully understands it. Not like one
no, but
individual. Yeah.
there are people who are more capable of gaming it for their own benefit at the expense of others.
Yes.
yeah, that's the part that angers me is that if a large player in this market fucks up, it leads to real human suffering on a large scale, right? That part angers me.
But nobody understands what they're doing at the time to stop them or assign blame. Like, I mean, 2008, nobody went to jail. Like, almost nobody went to jail.
Yeah. I mean, I would say that there is no way to democratize the punishment of bad actors, because not enough people understand what's going on to create a vocal populace against the actions that are being taken, right?
Yeah. And you just end up getting just a bunch of political unrest and social unrest because everybody knows that, everything's getting shittier. They can't quite put their finger on exactly what transpired to make that happen.
Yep, it's sad.
Everybody just picks their thing that they're gonna get angry at and assign blame to. Just creates chaos.
Yep.
I think the electric communications grid is probably equal to or arguably more important, all funded by the financial markets. All human
Yeah.
development, our ability to grow as a species and advance, completely tied to this.
100%.
Yeah, I have to agree. Even as an engineer who appreciates the value of the grid, value of electricity, and the internet, all that stuff. I mean, yeah, the creation of money and debt and risk and the management of that probably the single greatest or most impactful thing we've ever made. It's just hard because you can't eat money, you can't use directly, right? In a vacuum, you can't eat money, you can't use money to condition your home or heat your home, but you can, right? And the fact that you can convert money into all of those other things, an extremely liquid environment that billions of people are working with today, is kind of insane.
This is kind of JFresh's mic is a little bit cooked, but he's kind of talking about being able to maintain a liquid market for everything, right? And this is kind of what Superstonk never or always refused to grasp. Was that the SEC does these things, they don't do them against the individual investor, they do them to create a robust liquid market, right? And that's why something like GME would never win, because it's directly against, even if everything they said about it was true, it would never happen because it's the antithesis of the SEC's goals in creating liquid and broadly used markets, right? If you have one stock that could disrupt the system so much, that would disincentivize people from participating in the market.
Yeah, because it's the right now, right? Like the paradigm that makes the most sense is you can have a monkey throw darts at a board and you'll probably turn out positive, right? Versus the other way around, which is where you'd be throwing your darts at the board, but if some monkey throws the dart at the wrong spot, all of a sudden everybody loses money. That's way worse.
Yeah.
So that's what they don't want to happen. That's what GME was. It's literally what GameStop turned into, was just the wrong stock, just a stock rocketed out of control like that, and it posed a risk to the global financial system because you had more delta to hedge than existed, right?
Yeah, but I would say it's more than just a nebulous, you know, I think GME was more than just a stock that exposed a weakness in the system or showed, you know, a singular point of risk. Because you could say the same exact thing about something like Nvidia or all of the meme 7 right now, or the AI mania. And I think that the only reason that the SEC hasn't put out, you know, a cheeky little infomercial game show commercial about, you know, the dangers of investing in meme stocks, putting Nvidia and Apple and
The
Microsoft
danger of
and all those up there.
over investing in tech.
Yeah, because, you know, the right people are pushing those stocks, right?
Well,
But
it's
if
not
Nvidia
it's
went
not
to
just the right
$100,
people. The collapse presents systemic risk.
well, that's what I'm saying, right?
Yeah.
But there's no infomercials about the dangers of that because, you know, the right people think it's a good investment versus, you know, the apes or the monkeys or whoever that are too stupid to make a good decision.
Well,
But
yeah, it
there's really
comes
no
down
difference.
to,
Like if Nvidia went to $100 tonight, I mean, that would cause absolutely catastrophic. It would be chaos.
well, no, the better argument is if Nvidia went to $20,000 overnight, it would cause financial market collapse.
Yeah.
That's the and that's the thing, is like I say, the market's doing a GME right now and no one cares, but the reason why is because it's all relative, right? When the market gamma squeezes, like, even it's to a smaller scale, so it's not like, it is not the end of the world, but it is an evidence of the same mechanisms at play. But the difference is that instead of liquidity dropping in clearinghouses for one stock, right? It's liquidity dropping in clearinghouses to push up the portfolios of over 100 million people, right? So it's all relative.
Yeah. But I mean, even just look at like SMCI. It literally gamma squeezed into the S&P 500. Not a peep from anyone about the dangers of that.
Yeah. Well, no, like I said, it comes down to what kind of suffering will be begotten by that, right?
Yeah, there's no
Which right now it seems benign.
market makers at risk, right? They handled the SMCI squeeze just fine.
Yeah.
So
Probably
far,
with stuff they learned from GameStop.
probably.
Like that was a treasure trove.
I mean, if you're thinking about it like, broad risk, right? The only real danger is that the 10% lose their money. If the 90% lose all their money, it's like a blip.
Yeah.
Yep. So, but there is
But my point is that the SEC has chosen a side, and it's not yours.
Yeah.
Yeah, I mean, the SEC chose your side if it's buying SPY, pretty much.
Sure, yeah. I mean, yeah, they do a lot in terms of regulating markets, and yes, they do create guardrails that are helpful broadly, but when it really comes down to it, they have to pick a side. It's not yours.
What do you think has been pumping tech? LOL. Huge amounts of leverage gotten on the back of what was effectively a squeeze on long duration. And then banks. Banks leveraging up that long duration into options. That's what's driven tech.
All you have to do
it's
is
not their fucking earnings. It's not their future valuations. It's none of that. It's just massive dispersion.
Yeah, all you have to do is look at how much banks are making from investing activities right now, and that'll tell you the whole story. Like, it's crazy. Like, I mentioned it right at I think it was at the beginning of 2023. I was like, I bet bank investing activities are gonna go up. I had no idea they were gonna rocket like they did. Like, it's mind blowing, and it's very apparent when you look at things like the short vol saddle. Like, the amount of leverage in the short vol saddle, and like just being short Vana on the 0 DTEs. Like, on Friday, there was something like 230,000 puts being sold up to like 150 basis points out of the money. And on that small drop we had intraday, I watched the 150 put, right? We were dropping from, like, it was like, from 5222 down to a low of 5188. And I watched the 5150 put go from 90 cents up to almost $3.
Yeah.
Like, so the amount of leverage packed into the 0 DTE market alone tells you that this is just a huge fucking money grab for yields that are ridiculous.
They're insane.
They're insane. Like, if you just short, 100 bips out of the money right on either side, I mean, statistically speaking, your Sharpe ratio is going to be something fucking ridiculous.
Yeah, I think
Like,
I said like a week ago or so that the real risk-free rate is like 70%.
yeah, it's crazy. Like,
Dork, can you
it's
do me a
nuts.
favor? Don't ever
What's up?
advise the pickle jar to go long gamma, because they don't use stop losses.
Oh yeah, long gammas. Well, I mean, the thing about long gamma is when you're in a regime like this, long gamma is actually not that profitable.
Oh, you probably left that part off.
Yeah.
I don't know.
Well,
I don't know.
I
I
don't.
missed the whole going long gamma thing.
I wouldn't. I mean, like, long gamma is fun because your option's really volatile, but like, in reality, in these sorts of regimes, like, you notice the intraday price action, except for the big sell-off and the response to it. It just stair steps around. I mean, in those situations, long gamma, it could work for longer dated stuff, but the reality is that for a directional play, especially intraday, I mean, you would want to go long delta because like your gamma curve, right, that bell curve that you get is ridiculously tight. It's so fucking tight that, like, it's just, you'll get your little gamma spike, but if there's a reversal at all, it's just gone and you've just lost beta.
Well, it's because the second it spikes above the average distribution for the price of the day, 9,000 algos pile in and sell the fuck out of the contract.
Yeah, exactly. Yeah, that's exactly right. So yeah, it's ridiculous, and I don't know the solution to this though. I mean, besides adding additional margin requirements to 0 DTE options, but that'll fundamentally change the structure of the entire equity market.
They need to
Like,
haircut margin hard.
well, that would mean that every Friday it just got way more volatile, right?
Yeah.
So you'd get crazy amounts of position closing heading into Friday, and the market maker hedge would just go wild.
Problem is, if you haircut margin more, banks might fail.
Right. Well, yeah, if you cut that, like, if you cut margin, if you put a margin requirement on there just like a little bit because of the leverage that's in it, yeah, you'd create a huge amount of volatility as you crush those yields, right?
Mm-hmm.
So it's a very, very crazy spot to be in, and I'm sure the SEC right now is just scratching their heads and wondering how they can make things like Thursday not happen.
Okay. Well, FINRA could make something not happen. The SEC doesn't have any way of doing that.
Oh, right. Yeah, I guess it would be FINRA or the OCC.
FINRA's not going to be responsible for the collapse of the options market.
Well, the thing is they might be if we get something like Thursday was Thursday was a reaction to some Fed speak and I think like some intelligence about Iran and Israel, right? And that wasn't even that scary of a thing. I mean, what happens if intraday, like I've been saying, what happens if intraday Sam Altman, an investigation of Sam Altman for fraud comes out, or Nvidia investigation for fraud comes out intraday? Like that's
It
like
already did, remember? France is like investigating Nvidia for fraud and no one cared.
well, that's France. It's not if the U.S. was doing it though. If the SEC investigated fucking, Jensen or something like that, I mean, you could end up with like a 6% down day if it happens intraday.
They'll wait till France has conclusive evidence, and then they'll do it.
It's been a while though. You'd think they'd have something would have leaked.
I don't think that Nvidia is going to get investigated for fraud. I don't think Jensen is the same thing.
Nobody's going to do that until Nvidia stock goes down.
I think that Sam Altman is a much more realistic candidate for an investigation because he has been taking OpenAI money and using it to invest in companies that he has a vested holding in.
Yeah.
So there's a much more realistic.
He also kind of perjured himself in front of Congress. Don't care about that either.
Eventually, someone's going to care.
No one in the history of the United States has ever cared about perjury, except when Bill Clinton lied about fucking his secretary.
True.
Right, that's very true.
That's only because he got a blowjob in the White House, which is probably every American man's actual dream.
That's true.
Dork tracking Sharp ratios, while 60% of the pickle jar has a port that is 100% options. Listen, this is why I keep Dork around and why I love Dork, is because Dork is incapable of seeing short time frames. So I'll be like, I'm going to spend $100,000 on these options, and at the end of the day, I'll either have $100,000 less dollars or I'll have $600,000. And Dork's like, wait. Just do 10.
Yeah, I don't know. It's just this market is so crazy. I mean, the way, like, if you really like just drill down and like come up with a composite thesis that the market is pricing in right now, it's crazy. It's actually crazy. Like, let's think about it. Okay, the most expensive stocks in the stock market right now. What do? Okay, they sell cloud computing services. One of them, delivers goods to people. So okay, they've got a decent explanation, and they do cloud services. The other ones, though, they're just tech companies that people use to look up dildos on the internet or to or to shout at the sky about their political leanings, and like that's what's being priced the most expensive in the market. Okay, and not only that, but in the volatility market, and except for the past couple days, we've been pricing in that not only are these companies going to do fine, they're going to do amazingly, and they are going to outgrow every single other company, the ones that make glizzies, the ones that make cars, all that shit. They're going to do so much better, and they're going to ultimately end up with the lion's share of commerce in the globe, right? Like, we're literally pricing in cyberpunk, if you think about it.
It won't work,
I mean,
though.
we talked about this at length last week, and
Yeah.
I would encourage people to go back and listen to that. I don't think we need to dredge all that up again. But yeah, I mean, 80% of the shit that all of humanity does is unnecessary, right? So we're just it's the fake economy.
And we're pricing it in and being more optimistic about it now than at any other point in history.
Wait, when did Sweden's central bank blow up?
How does the central bank blow up? I don't understand that at all.
Losses exceed holdings?
Yeah.
Yeah, but why does that matter?
Oh, where's that
Because
guy
they're
who's
not
always
US.
in here? The Swedish guy who's always in here bragging about how great Sweden is.
Wait, no. I actually want. Is this true? Did this like just happen today? Why would it happen on Sunday? I have so many questions.
I have no idea. They asked for $4.1 billion to cover bond losses.
Oh yeah, that's so okay. That's what it
mean,
was. Yeah, that's what I was talking about earlier. Yeah, but they don't need it, right? I mean,
Yeah,
I think what it was in Sweden is there's like a legislative obligation for like how many losses they can sit on. But that's just like a mechanical thing. You just have to go to the legislator and say, please print us some money and give it to us. Like a central bank can't.
Yeah, they have a basic equity level, and they need $4.1 billion to meet that requirement. But it's not.
Yeah,
That's
that's
not.
what it
They're
was.
not blowing up.
No, they're just meeting a because
They're
central banks
bleeding. They're bleeding, but they're
Yeah,
not blowing up.
but that's the thing that when I say a central bank can't blow up, I mean they probably could. But I mean they never ever have to mark to market anything unless I guess they're legislatively compelled to, which is out here.
So,
But,
so
but the basic premise of a central bank is they never have to mark to market.
So the central bank can blow up, JFresh. It's called a debt spiral, right? Where they're
That's
where
sort
they-
of like, did the central bank blow up or did just the entire government blow up?
right. So if a central bank can't ease its way into a yield curve control, then it's blown up, right? If you like literally can't buy bonds enough to keep yields, at a sustainable level. So that's when a central bank blows up, and you'd see like, let's just say,
That also, well, hold on. That also takes the entire rolling maturity period of the central bank's current holdings.
yeah.
So it's really not very realistic. I mean, yes, a central bank can blow up over 20, 30 years, but it's pretty hard for it to happen.
Yeah, and it can only really happen if you're not the reserve currency too, because then you can pretty much control everything,
Yeah.
right? But the bailout would have to come from that reserve currency. But
It depends
I
on how
digress.
diversified the banks serving you are, though. But
Yeah,
yes,
it's true.
yes.
So, but yeah, I don't know. I feel like that's enough long-term talk. I feel like everyone's asleep by now, so we can actually talk about short-term and the people who actually care about that stuff. Now they get the reward of us talking about short-term stuff. Wait,
Guys,
the
looks like
amount?
I think a 3-hour podcast might be too.
You think a 3-hour podcast is too long?
It might be.
No. It should be 4 hours. That's the problem. It's just
16.
not long enough.
Yeah. Our viewer count actually went up.
It did, yeah.
Yeah, well, I think it's people trying to like time the discussion. So they don't. They just assume that like the first hour and a half, 2 hours is still bullshit. They don't want to wait. So they tune in around like.
So now that we've tricked them, now we can go into even more long-term talk.
Yeah. So anyway, so for the next macro hour.
That's true. Yeah, I didn't give my long-term description of what I think Dixie is going to do.
Go up a bunch and then crash?
Yes.
Okay.
That was easy.
Yeah. What are you thinking? 106, 110?
I think that we start having some serious problems above 106. Yeah. If we go to 110, then that's bad news bears.
Didn't we go to like 115 in 2021?
We went to 115 in 2022.
Yeah.
So why 106 to 110? Why is that? That's so much.
Yields are higher now with dollar lower.
Yeah.
Yeah, I'm not a forex market guy.
You don't want to be.
I've tried to avoid it. There's plenty of forex people on Twitter. Just go ask them.
You know what? There's very few of people. Like, there's guys that are great at macro. There's guys that are great at bonds. There's guys that are amazing at understanding the currency markets. It's really hard to find anybody who kind of understands all three. And they're all directly influencing each other. But no like professionals, like there's no like quantitative researchers that are acutely aware of all three markets at any given time.
I mean, it's just a lot, right?
It is, yeah, but I mean, I don't understand how you can like, I know plenty of guys that do, but it's like I don't understand how you can do analysis and trade bonds and not look at like foreign currencies or foreign bond markets, right?
Yeah.
Like the assumption from everybody who does bonds is just like UST is king.
I don't know how so many people
US AAA.
equity with just backdating RSI, but they find that.
I need to hang out with more like junk bond guys because they really have to pay
Yeah.
attention to multiple markets.
There you go. Yeah, the junk bond guys are the real ballsy dudes. And
They're
gals.
crazy. They're crazy. They're all cokeheads. They're crazy. Also, all of them were born before 1960. Like a junk bond trader hasn't been born in the last 60 years.
Well, I can tell you I have no interest in junk bonds. There's plenty of other things that stuff I need to.
I have no interest in trading junk bonds, but I could have interest in buying junk bonds as convertible notes and then using them to short the fuck out of a company. That sounds
You
fun.
know what I have way too many of that I kind of want to get rid of? Preferred shares in weird U.S. regional banks. I started buying them in 2023.
What's the story behind that? Yeah.
Well, I started getting them in 2023 because they had fat yields, right? And in the event of a failure, preferred shares are covered, right?
Yeah.
In the liquidation process.
More
And so, yeah, well, yeah, more covered than equities. So I thought, this is great. I'll collect 20% a month, right? And or 20% a month or 20% a quarter, and then just sit on this shit. And if these banks die, whatever, you know, and then if they don't die, I'll get all my, like, I'll get growth, right? So it seemed easy enough, and now I'm
so
thinking,
you went long the Fed.
yeah, kind of. Now I'm thinking that the Fed's not so great. And I kind of maybe don't want those anymore.
All right, now that we've fully committed to the next hour of macro talk,
Yeah.
here's my question. When was the last time the Federal Reserve said the phrase, the banks are sound and resilient? Seems like it's been a while.
It has been a few meetings since they've said it.
Said what?
The banks are sound and resilient.
They haven't said it since November.
There you go. It might be time to sell those preferred shares.
Why is it every time I say something on stream, Poopy Pants thinks I'm subtly hinting at what stocks to buy? I mean, he's 100% right, but I don't get why he does that. He's just like he starts talking about HYG when I was talking about preferred shares. Ew, not JNK, dork. God damn.
Hey, we were talking about junk bonds.
Yeah, I know, but you don't want them. You just want people that understand why they're a bad investment. We're gonna get so many fucking bankruptcies this year.
Dude,
maturity wall. We're already like what, a few weeks into the maturity wall now. Publicly traded companies are gonna start dropping like flies.
But everybody on Twitter told me that's not going to be the thing.
Everybody on Twitter is an idiot.
Here's the funny thing about Twitter is that like there's like a group of people on Twitter that are super bearish. You know, like that guy who's like on YouTube and every single one of his streetcars is just hid behind a roaring fire.
Mm-hmm.
Dork knows what I'm talking about. If you anyway, it doesn't matter. There's like that group on Twitter who's just like super bearish all the time. He's just trying to drum up viewership by being, you know, provocative and scary. And then there's like that other part of Twitter where their whole shtick is just making fun of people who suggest that something bad might happen because the probability is such that it won't happen. And so then they have like their whole like value to the Twitterverse is they're trolling the bears. But it's kind of created this environment where like people are afraid to speak openly about a risk that they see as being real because they don't want to get heckled for it.
See, I just present the data, but I don't really talk about what the effects will be, and I managed to avoid the heckling.
I really wish more people heckled you take.
Yeah, it is. It is really unfortunate
Twitter's not
because
about taking.
everybody on Twitter is
Do it
just trying to
Twitter
get engagement, and you get more engagement being overtly negative or overtly positive, right? But
Yeah.
like just presenting facts and then addressing what they mean, like that's not really engagement driving, and so nobody wants to do that.
Yeah.
And
Stop trying to teach people things and edifying their lives. Just throw shit, join the party. Let's go.
I don't like that. I don't want to just fling shit all
I
over
don't either.
Twitter. It
That's
gets
actually, yeah,
so boring.
Well, you also got to put
it
the you got
does.
to put the alarm lights on your posts, right?
Yeah, I don't do that either.
And the
I was
eyeballs.
I
Your
always
eyeballs.
forget.
I did see a couple of zingers from York. He's been putting some feelers out on Twitter, which I fully endorse.
I just retweet
I can't
anytime
remember what
Dork
they
comes
were.
up in my feed because he doesn't have nearly as many followers to shill to.
Yeah,
I feel like that's not good for us in the long run.
I think it's mostly just because he doesn't have a blue check mark, and I think they just are proliferating.
People just don't trust him. I don't. I mean,
Well, no, I think the Twitter algo is just they prefer to because they want to encourage people to keep paying for the blue check mark, and so they want to make sure that those people receive a certain threshold of engagement. It's just like any social media.
well, we get free check marks now. We don't have to pay for that shit anymore.
We do?
Yeah, because we have enough followers. If you have like more than like 5,000 followers, you get Twitter Pro for free.
Oh, cool.
Yeah.
I'll have to make sure that got changed.
Yeah, I gotta cancel that on my credit card too.
Yeah, most of what I've been doing on Twitter these days is just talking shit about short vol. I should probably do something else, but to me, and then in the near term, it's the biggest fucking risk in the entire fucking equity market is either short vol or the tech bubble collapsing. But short vol is much more present, you know.
Yeah. Well, I mean, they're hand in hand, right? Because they're driven by
Yeah.
dispersion. So one
Yeah,
collapses, so
same
does
trade.
the other.
It's the same trade. When you look
Yeah.
at Friday, right? I mean, that's well. It's interesting. They were not as successful at shorting vol, but I mean, you looked at all the meme 7 stocks, and they're just all like 2.5% up. It was just wild.
You mean Meta was up 7% on the week?
Was it?
Yeah.
Well, I know it went up like 3% on Thursday. It was like the only green stock on the market or something. Something weird's going on there.
Because it gapped up like fucking like 2%.
I just want to read something to you guys that I wrote December 15th of last year before we finish our macro talk and get onto the actual market. The Fed has relied heavily on its narrative almost more than its other tools over the past 2 years. There's blind faith in their narrative could be used to their advantage. Suppose they were to suggest that they're going to cut rates without actually doing so, and without confirming the end of the rate hiking cycle. Investors, assuming that the peak has been reached, might rush into longer duration. But if the Fed doesn't actually cut rates, knowing that inflation is likely to remain high due to a weaker dollar, rising oil prices, and reinflating asset bubbles, they would have successfully sold a significant amount of longer duration debt to the unwitting. When the policy remains restrictive and yields rise again, financial conditions will inevitably tighten, carry trades will already have collapsed, and the Treasury might be compelled to manage their long-term debt more effectively by issuing more duration. This could move to counteract the Treasury's potential to undermine the Fed's monetary policy efforts, finally enabling the necessary tightening cycle the Fed has been attempting to implement for 2 years. And it's almost, I mean, I don't want to say I can perfectly predict the future.
Yeah, here's the thing, though, is that sort of baked into that thesis that you just laid out is that the Fed has like the mental acuity to put that plan together. And I don't know. I know they're very smart people and they work with a lot of smart folks there, but I'm still on the fence. That's like the least credible part about that whole plan.
is if you factor in the Fed's ineptitude.
I certainly would not. I could see that they could perhaps have stumbled into that as well. So you've got a null hypothesis that you have to reject here.
True, true. I don't even disagree that they could have stumbled into it by accident, but the effect will be the same.
Yeah,
So, I mean,
yeah. Well, they got Citrini, got him hook, line, and sinker.
yep, he's fucked. I'm short TLT already. What are you asking me, Sisyphus? I've been short TLT since it was like almost at 100. I literally went from long duration to short duration. That was I've never believed in any of this shit.
Yeah, I'm not really a great trader. I think I've been pretty clear about that. But I was pretty proud about how I faded the top of that.
You sold all your like duration shit off in Jan too, right?
I started phasing it out, and I think early to mid December, and I think I was out. I don't remember when I was out, but I was fully out somewhere in there.
I think
I
I
think
mostly I got rid of all of my long duration before the end of the fiscal year, and then the rest of it by like the beginning of Jan. And I've just been short TLT ever since.
it was just like every week I was like, all right, I got something to sell. I was calling up tranches for a while. I was feeling real. I was getting really into it.
All right, so
I
this
was
week,
yeah. Okay, sorry.
no, you're fine. I just don't want to get into a conversation about tranches. Um, this week we've got we should have some duration auctions, 3-year, and 10-year, I believe. Yep, that's correct. Then we have CPI, PPI Wednesday, Thursday. We're pretty open from Monday till Wednesday. Or, yeah, Monday till Wednesday. Not a lot besides 1 3-year auctions. I think if we're going to see a recovery in indexes, the first 2 days of this week are probably the most likely time for things to get closer to neutral. But there's a possibility that 5,200 now is neutral, as far as the options are positioned on SPX. I think the vast majority of call side interest right now is concentrated between like 5,200 and 5,250. But most of that gamma through that range from like 5175 up through 5250 is just pretty flat. So it's heavily contested. I would say like wide chop within the $75 range is probably really likely until CPI PPI prints. Oh, by the way, I won
Yeah, I mean,
last week.
uh,
I know.
I thought I
Dork
knew it was gonna be
Dork came
close.
Dork came so close. If we got a continuation on Friday, Dork would have beat me.
Well, I was just like the whole week. It seemed like violent chop, and then we looked back, and so we had that big drop. So we were kind of flat all week, but we started from the wrong spot.
Yeah. You weren't wrong about it being pretty flat. It was just you were just a higher range.
Yeah, no, I agree. I mean, if nothing's really popping up the first few days as everybody gets ready for CPI, I think, yeah, that'll be like the weird part. Everyone's gonna be like, oh, look at how much vol's going down right before CPI, which seems counterintuitive. Nobody's hedging that, but yeah, I think that's an opportunity for short vol to short the void.
End
The
of
lack of
week bank earnings. Bank earnings should be good though. Yields aren't high enough where they would be damaging to their net interest income. Not yet. And this last quarter yields were low as fuck.
yeah.
So banks should be killing it this quarter. Like I might even play bank earnings. Just because it's just so predictable, right? Like equities are through the roof and yields were down most of the quarter. It seems like there's no way banks could have lost over the last 3 months.
I'm sure call premiums are going to be so high because everyone else thinks the same thing.
Yeah, probably. Although IV in that sector doesn't really spike that hard.
Well, neither do stock prices.
That's not true. Remember when I went long Schwab before earnings and it ran like $20 the next day? All of those banks are like trading like 30% under their long run average.
All
Yeah,
right.
this is the
There's a-
alternatives era.
Yeah, this is the alternatives era, Dork. Find assets, make them better. All right.
Yeah, you need to start pricing banks based on their innovation.
That's true. Yeah, I still haven't gotten on the price to AI train.
You guys got to start letting Girk predict first, and then you each guess $1 above and below him. What? Stop trying to fuck up my win rate, Newport.
All right, let's do it. Sounds like a great idea.
Oh yeah,
So,
can I do like a parlay on Girk's?
I'm
on
not
Girk's
even.
prediction?
Fuck you. I'm going last now. Fuck you guys.
All right. Well, okay. So here's what he said. What day is the? I'm driving. So what day is the 3-day or is it 3-year bond auction?
Tuesday.
Tuesday.
Tuesday,
That'd be
then
kind of
CPI, PPI, bank earnings.
So the 3-year. So one thing that I've noticed about the auctions, I was expecting more fat tails on the long duration. We haven't really been seeing that.
We haven't gotten those because of the currency risk.
Yeah, but what we have been seeing that was kind of interesting is that the percentage of the bonds that the primes are taking for the short end,
The bid to covers have been terrible.
yeah, have been pretty large. So the 3-year could be a little long. Okay, so I guess I'll say this: the 3-year is probably going to create some volatility. I don't know that it will create some directionality, but it could be a little bit less than nothing burger.
Yeah.
All right. So what's the prediction for the week?
Mine? Do I have to go
Yeah.
first?
I can go
All
first if
right.
you want to go first.
Let's start.
I'll go first.
Let's start.
Flat all week.
God damn you.
No. I'll actually try to make a prediction. I think I think we're gonna open lower with pre-market. I think we're gonna open at like 50. Where are we at right now? 52.05.
5204.
I think we're gonna open at like 51.80.
Okay.
And then we're just gonna rock it up to like 52.25
By when?
by
End of day Monday.
end of day Monday. Yeah.
Okay. So 52.25.
Then Tuesday we're gonna be flat at 52.25.
All right.
Then Wednesday's gonna be the tough one because oil's still going up.
CPI is high.
Housing,
Right. There's just no question. Housing's going up.
yeah,
Oil's going
I
up.
think, yeah. If I had to, yeah, because the housing's been sticky.
Yeah, don't forget it's March CPI.
Yeah, so I'm gonna say probably more likely it's gonna be hot than cold. So that's gonna cause the NM to just monster hedge down to like 51.75 end of day on Wednesday.
Okay.
Then
PPI Thursday.
yeah, so I think that's probably gonna be well, it was weird. Maybe we could talk about this real quick.
Sure.
Macro talk. Because it was which report was it that came out last week that showed that
PCE.
no
ISM prices.
ISM
Manufacturing
that was
prices and
really
services
low.
prices. They were both up though.
Yeah, but like everything was up, but like the
Not as
prices
much.
paid was surprisingly low, and I think that led to a lot of the volatility.
Yeah, I think ISM manufacturing prices were 0.4 and services prices were 0.2.
Yeah. So I would say maybe a little bit of a bounce on Thursday to like, where am I at? 51.75?
Yep.
51.90.
Okay. Then Friday's bank earnings.
Well, I actually gave it my best shot, and I think I ended up with the same result anyway. I think we're going to close at 52.05.
Well, at least you have some variation and you're completely flat, right?
Yeah.
That's not too bad. All right, Dork.
My turn. Okay.
Yep.
Open at 51.90, and then Tuesday close at 52.35.
Okay.
And then okay, so close Wednesday at 51.50.
Okay.
Okay, now close Thursday at 51.75.
All right.
And close Friday at 51.15.
Woo!
Damn. All right.
That's spicy.
Interesting.
I assume my assumption is that if CPI is hot, we're going to break the long-term uptrend, and it's going to start causing people to actually buy puts.
So I kind of agree with both of you. Open lower. I don't know if we break 90 though, so I'm gonna say we open around like 51. You know what? What do we do? 51. Increase vol. Maybe I'll say we open lower than what you guys are thinking. I think maybe like 51.75. Bounce over the next 2 days, bounce back to 52, a test of 52.50. I think CPI. Hold on. No, this isn't. All right, so Monday, open like 75. Bounce back 52.25 by end of day. So I kind of agree with you guys on that. And then I think Tuesday we get up to 52.50. Midday Tuesday, test 52.75, but close 52.50. PPI back down to 5,200. Bank earnings into the end of the week back up to like 52.25.
Bullish Girk this week.
Yep, a little bit.
I don't think he's wrong.
Well, one of us is going to be wrong.
Two of us are going to be wrong, actually.
That's true.
It's
Very true.
You know what? I actually think bank earnings are going to be a little better than that. 52.40.
No shit.
Party goes on.
Get those ranges moved over, and let me take a screenshot of the dot plot for everyone.
Yep.
There we go. Perfect.
Carl can pin that.
Yeah, I got it.
One of these weeks, Dork's going to be right, and we'll all be so happy. I mean, the only reason Dork's been wrong is because he's leaned on 2 consecutive days of downside in all of his predictions, and that's never happened.
Ever in the history of the market.
Yeah. The market's never gone down 2 days in a row. At least not since any of us have been born.
Oh my god, it's so true. Oh, Dork, remind me later tonight when I'm home settled that I have the perfect YouTube video to post about you in the Discord chat that I think everybody will enjoy.
You're gonna what?
He's gonna
Remind
post
me
a
when I get
YouTube
home and
video about
settled
you.
that I have a YouTube video that I'm going to post about you that I think everyone will enjoy.
Okay, I'll remind you.
It's
I'm
got
gonna-
a little bit of the like PJ in it. It's got you in it. It's got squiggles. It's gonna be good.
I'm gonna add
Ooh, I love
everybody on it.
Okay, just remind me because I've had a kind of a whirlwind of the last 4 days. It's not over yet, so
No worries. Don't worry. I'll bug you about data later too. So
yeah, I know it's on my list. You're like, hey, you forgot to do the data. So yeah, I've been running this fucking code.
I didn't know you
every
left
day.
again this week. I thought you were still. I thought you were
Oh,
still
yeah.
home.
I didn't really drop any. It was just like kind of something that was.
Yeah,
Tell you guys everything.
it's okay. I
gotta
leaked.
keep a
I leaked some screenshots from our upcoming venture, and people
Oh,
got
God.
super titillated.
I'm not ready to have those conversations.
Yeah, no one's ready to have this conversation, so we won't. That's easy.
True. Cool.
Look at Friday's pickles picks.
Now you're gonna make me look at Pickles picks, you dick.
Dork, you read them every night. I know who reads them. It's a thread. I see your fingerprints. All
But I
right.
already know it's gonna happen. You just sold it. Just gave me your whole weekly squiggle.
Well, yeah, but that changes. That'll literally change tonight when I see the options data. That's why I
Yeah,
tell
yeah.
people don't look at these fucking things. And like,
Well, that's why I
even
just
if
draw a
I'm
straight line.
even if I'm right, like 80% of the time, it's a huge miss to try to play them that way. Because it's so much can change in one day, especially in this environment.
Yeah. In this environment where nothing's based off of any sort of durable valuation.
Yeah.
definition. So like how does everybody feel right now? Well, I don't know. I feel like down's a little bit. I feel like ups. Let's go up.
I feel
Don't
like
leave-
we're gonna lose the long-term trend.
He says, Mike Mio says, "Don't leave me yet. I have no life." Yeah, but the rest of us do, man. So we've got shit to do. But the pickle jar's there for you. Don't worry.
Yeah, just go into the SPY SPX chain. Just say
Yeah.
what's up.
All right. Thank you guys so much for coming on. I appreciate it. Good talks, by the way, today. That was an enjoyable round of macroeconomics we got through. We didn't even talk
got
about
through a lot.
JFresh's pool. This is the most efficient
Yeah, that's
conversation
true.
we've ever had.
Well, I
even though,
haven't seen it in like 4 days. So who knows what it looks like?
yeah, we don't even know the condition of your
I
pool
actually
right
we
now.
could talk a little bit about my pool right at the end. I know you already said it's over.
I'm actually going to talk about my pool.
We should have a little.
I've got
Let's
this.
close it with some pool talk. Yeah.
Yeah, I've got this concrete guy that's coming in. He's starting this week, and I gotta go in and meet him on Wednesday. So, just so you guys know, I may not have a stream Wednesday, and then I'll be done with all this shit. But that might be the last one. He's in there, and it's just like him and a bunch of like old mob guys. And his sales tactic was to get me in his truck, and he took me to the pools he's built throughout the decades. And like he knows all the customers on a first name basis. And he's like, look at my work. I've never had to redo this. He's so unbelievable. Like he's got a larger ego than I do about the stock market, but about pools.
I mean, that's exactly what you want, right?
Yeah, and he's
Sounds
gonna
like he's
do
nailing it.
he's gonna do all the servicing too. So like all the like cleaning or whatever has to be done.
It sounds like he's nailing it.
Yeah. I mean the
Yeah.
pools that he did in the 70s still look pretty solid.
But what's his track record on shrimp cultivation?
I haven't gotten into that part with him yet, but I did tell him that I may not be using the pool for people. And he said, I don't care what you use the pool for, but it's not going to leak. And I was like, okay. Sounds like he's taking you to the pools that lasted. I mean, maybe. Maybe.
Yeah, some survivorship bias going on there.
Yeah, he's
Yeah.
just like every person on Twitter that just deletes all the tweets that don't look good.
Am I supposed to be doing that?
Yes.
I love all my tweets. I wouldn't tweet them if I didn't.
Yeah, I know,
Same.
me too. I've never deleted a tweet, even the ones that I feel really stupid about. I'll just leave them there because I said it, right?
Yeah,
Let me
because
down up.
it reminds you. It reminds you of your fuck up, which is way more painful than anything else. Nothing's worse
Very
than being
true.
wrong.
Well, I have nothing of note to say about my pool compared to that. I
Oh.
shocked it and put some acid in it before I left just to make sure it was
Spicy.
yeah. That's it.
Interesting.
I just balanced my pool before I left. But it's been 4 days, so we'll see. The trees have kind of stopped dumping stuff in them, so that's getting more under control. So good times.
Yeah, what is it's like mid spring weather in Texas now, right?
Yeah, it's like 80, 70 to 80.
Yeah. Yeah, it's
Some
still like
days we get
it's still like
85.
40, 50 here.
Gross.
Yeah.
But
But
it'll
my
be 110
but
here
my
soon
pool's indoors, sort of.
now. Well,
So
are you getting you have a heater, right? Or no?
I do, but they're installing a nat gas one because I'm putting in nat gas. So the one that it has the one that it has is electric, and it's also from the 70s. So you can imagine it's not very efficient.
No.
Yeah. Also, all the copper piping is fucked, so it's all gonna get ripped out and replaced because the seawater's been intruding. Yeah.
Yeah, you got to go PVC.
Yeah, that's what he's putting in, I think.
Yeah, I mean, you don't see any copper floating in the center of the Pacific Ocean. It's all plastic.
Jen says I don't have a pool, but it's raining, so there's some puddles in my shitty driveway. All right, splish splash.
That's cool enough.
Yeah, it's like a Midwest pool.
I mean,
Just a
you just lay it across
pothole.
your driveway. Now you've got a slip and slide.
That's true. A bumpy one.
The bumps are what make it fun, though.
The last time I got on a slip and slide, I went to spring break at what was it called? It's like a Northern California university that's in the middle of fucking nowhere, and all everyone does there is party. I can't remember the name of it. It's a shithole though. Like the whole town is just a complete shithole. There's nothing else to do but get fucked up. And I got blasted on Four Locos, partially naked, wearing like a wetsuit. Top. It was not Davis, but it's like near there. Begins with an M, I think. I don't know.
I'm getting into it with George on Twitter now. I'm loving this.
Nice.
Oh God.
He's
gotta be
gonna hate
careful,
you
man.
immediately. He's gonna ban you.
He already does.
Yeah.
Well, he hates everyone. That's the best part about him.
Well,
Oh
you
yeah,
have to, like, you have to like earn his
respect.
not non-hate. No, yeah, I don't think he respects anyone. He just
yeah.
There's some people he hates, and there's some people he feels nothing for, and you gotta work for that.
Right, you got to get out of the zone of contempt.
Oh my God, is this how people think about me?
What?
So I think about JFresh. I think JFresh at this point doesn't hate me. He's just annoyed by me.
I mean, I think every human on some level is kind of annoyed by every other human. I don't think
Oh,
that's special.
that's it. It's Chico. Chico State.
Chico,
Yeah, so
yeah.
I put on like a rash guard and my boxers, and I went on this slip and slide at like full speed right into a fucking fence.
Nice.
Like I went past the end of the slip and slide like another 50 yards right into a wooden fence. And there's a video somewhere on YouTube of me doing this.
So
I'm gonna say something to you that I once tweeted to Bill Ackman with no response. There's no better argument for a wealth tax than your existence.
I mean, that's probably true.
I just want to say that you are not the first person who has told me that they went and partied in Chico and woke up without clothes on.
The best, yeah, I mean, that happened. The weirdest thing that happened that weekend was um these two girls showed up at the party that were obviously in high school. And then they're like, me and my friends were like, don't go near those girls. They're 12. Or, well, they weren't. They were like 16 or something. But then their mom showed up, right? To get them. They were in trouble. Their mom showed up. And then their mom did a keg stand,
Nice.
which was epic.
That's a very Chico statement to make.
Yeah.
That place is it's where you go to get a degree in partying, but it says something else on the piece of paper.
Yeah, that's exactly accurate.
All the Chico grads I know are they're cool, really nice people, and I want nothing but the best for them. But you can tell they spent their college years partying.
I remember my buddy whose place we stayed at, who was going there. I think he was getting, I don't remember what he was getting a degree in at the time, actually. But
General
his like townhouse that he lived in had weed resin caked so thickly to the walls that you could scrape it off and smoke it.
Oh,
Yeah. It was the fucking smelliest shithole I've ever spent a weekend in. It was a good time though.
dude.
It was a good time.
You would have liked me as a younger lad. We had a at one point one of my buddies, like at the park and ride by where we lived, he had scraped all the resin out of all of his pipes and put it
Ugh.
into a gigantic resin ball, like the size of a golf ball,
Mhm.
and we just left it on one of like the light posts, like that concrete pillar that comes out, and then it's like the light post, little square thing. We left the ball on there, and for the next year, because we would meet up there for the next year, whenever one of my buddies who was like he would go pretty hard. Every time he stopped by there when he was like dry on weed, he would go and scrape a piece off the resin ball and smoke it.
Oh god.
Ew.
That's so fucking foul.
Dude, that resin
Not
ball
even
was
that, but imagine making a trip with that purpose. Like leaving your
What are you
house
doing?
with that
Yeah.
goal in
I mean,
mind.
wait. How does this? Do you scrape off a layer first to get like the
The
unadulterated stuff?
The
inside?
unoxidized stuff in the
Did it
middle.
like form a crust and you gotta like scrape the crust off, or did he just go like full
Dude.
crust?
He was 19. All right, he was just taking a scrape off of it, forming it into a smaller ball, and tossing it in his pipe and smoking it.
So he went full crust.
Oh, dude, we were the greasiest fucking kids you would ever imagine.
No, I've gone partying on Isla Vista at UCSB. That wasn't nearly as well. Actually, that was pretty bad too. I had to spend an entire night in a closet at a frat house because I fucked some guy's girlfriend. And I was completely naked, and I had to shit. Oh man! And so I shit in his golf club bag, and it turns out that the closet I was hiding in was the guy whose girlfriend I fucked.
Oh my god.
Yeah.
Hopefully I mean, I don't even know how to unpack that. You're a real special guy.
Girk, I just want to say that I'll probably be the first person to buy your autobiography.
I'm not a bad person, okay?
I didn't say that. Who said that?
I'm just stating it for the record.
You said that, so you feel like you're a bad person deep down.
Yeah, he's projecting. Yeah.
Yeah. This is classic projection.
Yeah, no, the greasiest people I've ever met and the greasiest situations I've ever been in have been in Chico, for sure.
Yeah, oh yeah. I don't doubt that at all.
Is it bad? What does it say about me that I want to go to Chico now?
It says that you're curious. It doesn't say anything else. But let me tell you, once you're there and you've partied with some of those college kids, you're gonna feel like a supreme douchebag.
They'll also, I mean, like, you're just in your mid-30s. They'll party with you.
Yeah, they will.
You're not aged out at all.
Yeah, you'll see people. 30s and 40s fucking that are like grad students forever on the 60-year plan fucking doing keg stands.
I remember
I mean,
like going
the
to
one
parties and
advantage
being
I feel
like, go ahead.
I was just saying, the one advantage I feel like I have over younger kids in general is that, yeah, even though I'm like older and fatter and nobody wants to touch my body, they want to hear what I have to say because that's shit.
You can also buy alcohol, so that's a huge. Like, you not only do you have money,
they're all like, only some of them are over 21.
yeah,
Bro,
yeah.
I don't want
So you can buy alcohol and you have money to buy alcohol. You're like a
Yeah.
king.
Okay, now I don't want to go because I feel like they're all going to be zeros.
Well, okay, so what you need to do is you need to get a shirt on that has like 3 random Greek letters on it and just say you're part of that frat at whatever party you go to and you'll be able to get in. But there's not a lot of elitism at Chico. That's kind of the cool thing about it is if there's a big old, party going on at a frat house, you pretty much just walk in. Versus at like Isla Vista
Do they
and
have
stuff, like
fraternities there? I don't think they do.
If I was part of a fake frat, I'd be part of Delta Zeta.
there you go.
Nice.
Well, it'd be Delta Zeta Nu, right?
Can we start our own
exactly.
fraternity called Delta Theta?
I think that's what we're doing, right?
I hope so.
I think so.
That's what we've been working on.
Okay. Oh my god, we're
Yeah,
gonna have
no,
a frat quant house.
Oh man, I'll be doing keg stands of IPA. It's gonna be great.
We'll just be eating the shrimp directly out of the pool, still alive.
Oh,
Alright, I've got shit to do. Fuck you guys.
Yeah.
I'll see you later. Have a good one. Thank you for coming on.
thanks for having us.
Later, guys.
Bye.
Nope. Wait, hold on. I gotta say goodbye to the rest of you. So I'll be around later in the day, not right away, but later in the day if you guys have any questions that I didn't get to on the stream. Thank you all so much for tuning in. Pickles Picks will be out tonight, and I'll see the rest of you. Oh, wait, before I go, did you guys like the new format? Like for Pickles Picks? Yes? Just the shorter format? Okay. I'll try to stick to that. Just if I slip and I start rambling for hours on end about the macro, just DM me and be like, man, you're doing it again. Okay? Alright, cool. Otherwise I'll keep it to that. Alright guys, have a good one. Enjoy the rest of your weekend. What's left of it. Not much now. Later.